So we'll now discuss the credit and debit notes. Credit and debit notes. Okay. Section 34. Now, supplier, recipient. Where supply of services or goods are done by supplier. Okay. And invoice is raised for 1000. Invoice is raised for 1000. Later on verification. So what happens in this case? In this case, in supplier's book, R is going to be credited. Okay, R is going to be debited, right? So R is R account debit to sales. So as per this concept, R being the recipient being the debtor. Suppose later on, recipient complains, sir, you send the tax invoice for 1000, but I got the goods only for 800 rupees. Actual receipts being 800 only. You have debited me 1000, sir. No problem. I will now credit your account. So now the supplier sends a credit note from supplier to the recipient. This is called credit note. For how much? For the 200 rupees. By doing so, the tax invoice value 1000 reduces to 800. And actual value of the goods received being 1100. Supplier says, I send only 1000 rupees tax invoice, sir, but it's the latest lot, the price is increased by 100. So anyhow, I quoted tax invoice, 1000 rupees in tax invoice, thought of the old value only, but today it is 1100, sir. Kindly give me the additional 100 rupees. Now, supplier sends him what? Debit note for how much? For this 100. Is that clear? So when it is being the debit note, of course, for this also GST is applicable. Here you can claim for the revision, refund and all, and adjust that in the subsequent filing of returns. Supplies issues credit note to the recipient in case of taxable value in invoice is more than taxable value. The invoice value is higher than the actual value, or instead of taxable value, it may be tax also. He charged 100 rupees. Later on, he came to know the real tax is only 80 rupees. For revision of tax also, he can issue credit note. And sometimes he may return the goods. 1000 rupees worth of goods sent by supplier to the recipient, and recipient says 200 rupees worth of goods seems to be unfit, so I return. Return of supply. Our supply is deficient. Probably the goods not up to the mark, or while committed to send, we committed for 1000 units, but we send only 950 units as remaining units not available. Supply is deficient. In all these cases, supplier issues the credit note. Credit note cannot be issued for secondary discount. For the secondary discount, you cannot subtract from the value, right? So original tax invoice being 1000 and secondary discount is given, say 150 rupees. Asking the recipient to pay only 850. Secondary discount means it's a ad hoc discount, and voluntarily supplier gives this discount after some years of, after some quantity sales are based on some achievements and all, but not applicable or shown in the tax invoice. That is called secondary discount. That secondary discount will not be subtracted. You have to pay the GST on 1000 only. For this, you cannot issue the credit note. Okay. Now, provided if the tax incident has been passed on to any other person, then this will not be permitted. Tax incident. For example, 1000 rupees, for that GST is 100. This fellow recipient sold to somebody else, and this 100 rupees also recovered from that person. then you cannot eligible for issuing the credit note. So while issuing the credit note, it is your intention to claim the tax paid to the government higher. Okay. So if the tax is the tax burden is transferred to some third party, we are not able to trace who has paid this, then you cannot issue the credit note. And in case of debit note, what happens? Just reverse. Taxable value is in invoice is less than the taxable value, or tax charge in invoice is less than the tax actually payable. In these cases, debit note. So in this case, debit note. In this case, credit note. And within which period you can issue the credit note or debit note? Very simple. You can remember this one. Okay. Whichever is earlier of 30th November following end of the financial year. For example, the financial year being 1/4/2025 ends on 31st March 2026. And whichever is earlier of for this period, any debit note, credit note related to this financial year will be issuable whichever is earlier of 30th November 2026 or the date of furnishing the relevant annual return. So number one, number two being date of furnishing annual return furnishing date. Okay. Remember, the due date for furnishing the annual return is 31st December 2026. Okay. After the completion of financial year, you have to file the return within the end of that respective calendar year within 31st December. Okay. So naturally what happens between these two, if you think the due date for filing of the annual return, it is always 31st December. If you think these two, always this will be the earlier. Isn't it? But what happens, this fellow has filed the annual return on 15th October 2026 itself. There's a chances because annual return due date is 31st December, but he can file before that also. If the filing date is before 30/11/2026, and that date will be taken. Otherwise, actual filing date for the annual return or 30/11/2026. Between these two, whichever is earlier, within which period you can issue the credit note or debit note. Note, the tax liability shall be adjusted, however, no reduction. So you can, based on that, the tax liability should also be adjusted. Of course, the same condition will be applicable here also. What's that? The incident of tax and interest passed on to the any other person should not be there. If the burden is transferred to some third party who is not being traceable, then also you are not eligible for issuing this debit or credit note. Now, in case of issue a debit note, declare the details of debit note in the return. You have to declare the reason also. Okay. For the month during which such a debit note has been issued and tax liability shall be adjusted. So you have to intimate this properly. Hope you will be now able to understand this concept. Now, what will be there in debit and credit note? Usually, what the tax invoice will have, the same content will be available in debit and credit note also. Name, address, and GST of the supplier, nature of the document, serial number like tax invoice. You have the invoice serial number for the debit and credit note also. The date of issue of document, name and address of the recipient, and including the GST and UAN if registered. If he is not being unregistered, at least name and address you need to fill this detail. Okay. Serial number and date of corresponding tax invoice. Okay. For what purpose this one is issued? So you have to refer the tax invoice also here. And value of supply of goods and whatever it may be, rate applicable, and signed duly by the authorized representative. So these are the things you have to fulfill. Clear particulars of the debit and credit note. Let's now start with this question. Okay. Karthik and Co., a registered supplier under GST, provides the following information regarding various tax invoices issued by it during the month of March. Okay. Value of supply charged in invoice number 1 was 2,50,000. Against the actual taxable value is only 230. So while supplying, we charged 250 in your tax invoice, but the actual value is only 230. We might have debited with 250. Now we have to debit only 230. It means we have to issue credit note. Clear? Credit note. By whom? By Karthik. By Karthik. Who shall issue the debit note or credit note under CGST Act? Usually the credit note issued by Karthik. Now second scenario, tax charged in invoice number 4 was 32,000. against the actual tax liability being 68,000. What happens? We might have debited him with 32 rupees, but actually we have to debit 68. You have to debit further. So issue debit note. Debit note by Karthi. And value charged in invoice number 8 was 3,20,000 as against the actual value of 4,20,000 due to wrong quantity considered while billing. So wrong quantity. We charge this much only, means this is the amount debited. Actually we have to debit this much. So we have to debit further. So again we need to issue debit note. Karthik asks you to answer the following question. Who shall issue debit or credit note? Usually the supplier. And whether debit note or credit note has to be issued in each of the above circumstances. So that is also be answered. What is the maximum time limit? What is the maximum time limit? Whichever is earlier of 30th November of the respective year or annual return filing date, not due date. Okay, due date is 31st December. We never bother about the actual due date. We bother about the filing date of annual return. So filing date. Okay. Now, we'll start with this one. MBM caretakers, a registered person, provides the service of repair and maintenance of electrical appliances. On 1st April, it has entered an annual maintenance contract with the P for its air conditioner and washing machine. So this is all about annual maintenance. As per the terms of contract, maintenance service will be provided on the first day of each quarter. Okay, of the relevant financial year, and payment for the same will be due on the date on which service is rendered. So what happens here? In case of continuous service, no supply of service, three conditions are there. If there is any due date in the contract, then that will be final. Otherwise, if there is any payment date, that date will be the final. Before the payment, the tax invoice will be payable. Other cases also we have. In this case, the due date is clearly mentioned, service rendered date. Service rendered date being April 1, July 1 and October 1, January 1. So this will be the due date for issuing the tax invoice in according with the terms of contract. The terms of contract is very clear when to issue the tax invoice. So as per that concept, you can consider the dates April 1, July 1, October 1, January 1 being the due date for issuing the tax invoice in case of continuous supply. When should MBM caretaker issues the invoice for the services rendered? So we have completed this. Clear? Next question. And this one. Kitsy Limited, a wholesaler of toys registered in Chandigarh, is renowned in the local market for various toys and their reasonable prices. Kitsy Limited makes supply of 100 pieces. Okay. Kitsy to recipient, 100 pieces of babies learning laptops and chat learning phones to Nancy General Stores. Okay. On 25th September. 25th September. Okay. 20 by issuing the tax invoice amounting to rupees 2020. Okay. By issuing tax invoice amounting to rupees 1 lakh. So the value being 1 lakh. So naturally, R is going to be debited in this case. However, the said toys were returned by Nancy General Store on 30th September. This entire thing is returned. Return means the debit should be cancelled. So debit should be cancelled means credit. So you have to issue credit note here. Debit note, refund voucher, credit note, payment voucher. What should be the document to be issued here? Credit note is the document you have to issue. Clear? Next. So this one completed. Uday Singh. We have to go for this one. Uday Singh. Uday Singh, a registered supplier, has received advance payment with respect to services to be supplied in Sujamal. His accountant asked him to issue the receipt voucher with respect to such services to be supplied. Okay. So advance payment. In case of advance payment, Uday Singh being the registered supplier and Sujamal is the recipient. Now advance is there. In case of advance, his accountant has asked him to issue the receipt voucher. Yes, of course, we have to issue the receipt voucher with respect to such services to be supplied. However, he is apprehensive as to what would happen in case receipt voucher is issued, but subsequently no services are supplied. See what happens here. Uday Singh feels that we issued the receipt voucher, later on we don't service, means there will be a trouble. No, what can we do? Okay, you are required to advise Uday Singh regarding the same. Yes, receipt voucher should be issued. If subsequently service not done, then you can simply refund this and then you can issue refund voucher also later on. Clear? If supply is done, no problem. It can be adjusted in the invoice price. Clear? Uday Singh case. Now, Bojraj, a registered person, Bojraj, a registered person has availed GTA services on which he is liable to pay under RCM basis. So, RCM basis is the recipient of the service from some GTA entity. He wishes to know whether he is required to issue an invoice. Yes, he has to issue the invoice, otherwise he is not eligible for the ITC. For any services he gets, he himself issues the invoice named as RCM basis invoice. Okay. Please advise him discussing the relevant provisions under GST, CGST. Yes, he has to issue invoice, tax invoice under stating this being RCM basis. Otherwise, he is not eligible for ITC. Because GTA is unregistered person, he cannot issue the tax invoice. He may give the bill of supply. Using the bill of supply, recipient cannot claim the ITC, but he has to pay the ITC under RCM basis. No, the ITC paid by him under RCM basis means the GST paid under RCM basis is claimable only if there is a valid tax invoice. So, he himself raises a valid tax invoice and he can claim the ITC on this. Sitaram Textiles has to send cloth for dyeing its job worker. Okay, has to send cloth for dyeing to its job worker. It wishes to know whether it needs to issue tax invoice at the time of sending the goods for job worker. For the job worker, tax invoice not required, right? Because it's not supply. As it's not supply, the job worker performs some activity on the goods I have given. Okay, probably dyeing work. Anyhow, it's going to be written later on after completion of the job work. Of course, we cannot issue the tax invoice as it's not being the supply. Please advise him with reference to the provision. Then what you have to do? You have to issue delivery challan, because while moving the goods from your place, you need to have the document. So for that, as tax invoice is missing, equivalent document for the movement. In other ways, other cases than the supply being the delivery challan. So you have to issue the delivery challan. Clear? Registration. In this chapter, we'll cover around 9 sections, starting with section 22, ends with 30. Right. Let me give the broader outlook of this registration chapter. Under section 22, we need to cover up the persons liable for registration. Okay, liable for registration, they cannot escape. Section, this one based on turnover. If their aggregate turnover crosses certain limit, okay, probably 10 lakhs, 20 lakhs and 40 lakhs. These are the three values are going to be discussed. On crossing these values, you have to go for registration mandatorily. Under section 24, it is not based on the aggregate turnover. Whether the aggregate turnover being 0 or even 1 rupee, you have to register compulsorily. They will be called as compulsory registration in certain cases. And section 23, of course, registration is liable only in this case if the aggregate turnover crosses certain limit. But I don't have to register under this section also, but I want to register myself, sir. Can I register? Of course, you can do registration also. This is called persons not liable for registration. If you wish, you can register voluntarily. Voluntary registration is allowed. So, this person, section 23 persons not required to register. So, 3 sections are there to guide you who has to register based on the turnover, who has to register irrespective of the turnover, who is not required to register and all. Okay, I now find out who has to register. Now, how can we register? So then it will come under procedure for registration. So these are the three sections are going to be covered for provision for registration. So how can I register, sir, in case in general scenario, sir? So you can register for your GST purpose under SGST as well as UTGST wherever you are doing your business with the state. Okay, once the registration is confirmed in the state, if you are doing the business in Tamil Nadu, you have to apply for registration only in Tamil Nadu state. Once the application in Tamil Nadu state is accepted and GST number is issued, automatically your number is registered in GST, CGST also. So that will be called a deemed registration. This will be application for registration to the respective state or union territory. Once here it is applied or confirmed, then this will also be confirmed for the CGST. Is that clear? Some special cases, already told you, in the very beginning itself, we have the CTP and NRTP. I don't want to do the business regularly, only for the temporary purpose, say 3 or 4 months. So for the 3 or 4 months, I need to pay the GST, but I don't want to get committed to long-term registration. Stating that I am going to do the business only for 2 months or 3 months, and applying for registration will be coming under 2 aspects. One is CTP, who is being only in India. And the person from foreign country, non-resident, wants to register for a temporary purpose also be discussed under section 27. Special provision relating to CTP and NRTP, casual taxable person and non-resident taxable persons. So first three sections are for the person liable for registration, and second 3 is for the registration procedure. And what happens, the registration, what I've done, supposed to be changed. The location is changed and the address means probably the constituency. Probably we may have the limited liability partnership. We want to convert into the public company or private company, or a partner is admitted and all. So how can we do the amendments and all? I do 2 activities for my supply of services. I want to add 1 extra. In all those cases, you can do amendment for registration 28. And finally, 29 and 30 is all about you want to stop your business. Okay, in that case, you can cancel your registration or temporarily you stop, then it's called suspension temporarily. And after cancellation, it came to know, no sir, I want to continue my business, so I want to revoke my cancellation. So how can we do? So 29 and 30 are for the cancellation and revocation. So these are the 9 sections we have to study. 3 for the persons liable for registration, another 3 for the procedure. 28 is the amendment, and 29 and 30 being the cancellation as well as revocation of cancellation. Right. Now, person liable for registration, okay, under section 22. So we have aggregate turnover. So already we covered what is called aggregate turnover. PAN based turnover you have to find out, okay, throughout India. So not GST based. So you will have the GST number for each and every state separately. For getting the GST number for every state, you have to give the same PAN number. So we have to value your total turnover based on the PAN, including the exempted supply as well as the zero rated supply and exported supply. All these things will be includable. If this value exceeds 20 lakhs, 10 lakhs and 40 lakhs in any financial year, then automatically you have to register. Okay. Now, every supplier is liable to be registered under this act where in the state or union territory from where he makes the taxable supply. He has to apply where the state or union territory where he has a business, not with the CGST. Once the approval is given in state and union territory, say state GST or UT GST, automatically your number is also allotted in CGST. Now, what about the 20, 10 and 40? In which of the states you have to consider this one? Let's, before go for the subsequent learning, we will now define what are called special category status states. Okay. So, to make you understand easily, I have formed an acronym here, MMNT, ASM, JA. Okay. MMNT, ASM and JA. These are the special category states. Almost 11 states are named as special category states. Okay. MMNT, Manipur, Mizoram, Nagaland and Tripura. ASM, Arunachal Pradesh, Sikkim, Uttarakhand and Meghalaya. So we used these 2 terms already where in case of composition levy, for them, if their aggregate turnover is more than 75 lakhs, then automatically they have to go for the regular taxpayer. So they are eligible for the composition taxpayer only when the aggregate turnover is less than 75 lakhs. For other cases, 150 lakhs, 1.5 C, up to that they can eligible for the composition levy. MMNT ASM. Okay. Manipur, Mizoram, Nagaland and Tripura, ASM, Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Jammu and Kashmir, Himachal Pradesh and Assam. These are the special category states. Jammu and Kashmir, Himachal Pradesh and Assam. All these things are northeast states of India. Okay. Now, in case of MMNT, if the aggregate turnover is more than 10 lakhs, they have to go compulsory registration. If you are doing any business in MMNT state, okay, then automatically even crossing 10 lakhs compels you to register for GST. Okay. Manipur, Mizoram, Nagaland and Tripura. Okay. Now, in case of ASM, in special category states, ASM and PT, these are not, the PT are not special category states, but general states only. They too register for GST once their aggregate turnover crosses 20 lakhs. Arunachal Pradesh, Sikkim, Uttarakhand and Meghalaya. PT represents Puducherry and Telangana. These two will not be special category state yet. The aggregate turnover limit in these two states being only 20 lakhs. And in case of JA and other states, okay. In this case, if they render, okay, supplier renders only taxable supply of services, okay, or supply of services and supply of goods, then the aggregate turnover limit is 20 lakhs. Okay, if supplier involves supply of taxable goods, then aggregate turnover limit is enhanced to 40 lakhs. Is that clear? In case of JA and other states, okay, JA and other states, if they involve only in rendering services, 20 lakhs, services and goods also 20 lakhs. If they are rendering supply of goods only, then 40 lakhs. The limit is enhanced to 40 lakhs. Clear? Hope you will be now able to understand the special category states. Now, this higher aggregate turnover will not be applicable. That 40 lakhs is not applicable. Okay, well, for the purpose of this subsection, a person shall be considered to be engaged exclusively in the supply of goods. Okay, yes, some and JA and other states. Okay, they need to involve only in supply of goods. Okay, if he is engaged in exempt supply of services provided by way of extending deposits and loans and advances, so far the consideration is represented by way of interest or discount. This will not be aggregate turnover at all, right? So we will not include this in aggregate turnover. So if there is goods and if there is any interest charged for the delayed payment on penalty as well as late payment or interest for the late payment, whatever the name may be, those things are named as services only, but you are collecting only for the interest component, right? So that will not be considered as your aggregate turnover. You forget about that. So leaving that, if you are involving only in the goods supply, the higher limit 40 lakhs will be applicable. But okay, this will not be applicable if he falls under compulsory registration under section 24. Okay, he has to compulsorily register. Whether he does 1 rupee business or not, definitely they have to register. And person engaged in making supplies of ice cream, pan masala, tobacco. It's not manufacturing. Okay, engaged in making supplies. Okay, supplies of these three. Okay, no extended threshold. Okay, so here this extended threshold limit will not be applicable. 40 lakhs will not be there. Only 20 lakhs is applicable. Person who opted voluntary registration. So he says, sir, I don't want to claim any benefits, sir. I want to register. So for the voluntary registration persons as well as compulsory registration persons and the persons engaged in making supplies of ice cream, pan masala and tobacco, in these cases, this 40 lakhs will not be applicable, only restricted to 20 lakhs. Is that clear? Only restricted to 20 lakhs. So we have three slabs, 10 lakhs, 20 lakhs and 40 lakhs. Majority cases, it's 20 lakhs. 10 lakhs is for MMNT. Okay. And ASM and PT, only 20 lakhs. Okay. Only in case of JA and other states, okay, if you are involving supply of goods alone, then your limit is enhanced to 40 lakhs, provided you should not fall under section 24 and you should not go for voluntary registration. You should not involve in the activities of selling or making ice cream, pan masala and tobacco. Clear? Now, Before we go for second, third and fourth points and all, so around 4 points are there. Under section 22, we have 4 points. First is the general class. 2, 3, 4 we'll study later. Before we go for 2 or 3, 4, let me finish off an illustration here to make you understand these provisions completely. Okay. Now, is the registration required or not for the following cases? Puducherry. Then it comes under ASM and JA. ASM and PT. Okay. Intrastate supply of books, his aggregate turnover is 24 lakhs. So in case of Puducherry, the limit is only 20 lakhs. Only 20 lakhs. Aggregate turnover limit being 20 lakhs. So here it exceeds, so registration is must. Registration is needed. Assam. Okay. Assam comes under JA. Okay. In case in intrastate supply of CA/CMA coaching, then service. In case of ASM and other states, in case of services, then the limit is only 20 lakhs. Is that okay? This one. Okay. JA means Jammu and Kashmir, Himachal Pradesh, Assam and other states. In case of service, the limit is only 20 lakhs. So here the turnover is 24 lakhs. So registration is must. SSA Assam engaged in intrastate supply of ice cream. Ice cream. So in case of ice cream, pan masala, tobacco, automatically the limit is only 20 lakhs. Then registration is must. SSA of Tamil Nadu engaged in intrastate supply of ice cream. So ice cream. Okay. Aggregate turnover being 14 lakhs and ice cream value being 14 lakhs and books being 24 lakhs. When the ice cream comes, the higher limit will not be applicable. Only lower limit is applicable. In total, his turnover being 38 lakhs. 38 lakhs. Though the turnover is 38 lakhs, he involves ice cream also a part of his supply. Overall 38 lakhs. 14 lakhs is the supply of ice cream. Another 24 lakhs is for the supply of goods. In pan-based aggregation, it comes around 38 lakhs. Anyhow involves ice cream, the higher limit 40 lakhs will not be applicable. So registration is must. SSA Puducherry. Puducherry automatically comes under ASM PT. Okay. His level is restricted to only 20 lakhs. Okay. Encased in intrastate supply of books, ATO is 24 lakhs. Of course, registration is must. Manipur is encased in intrastate supply. In case of Manipur, MMNT. Okay. Manipur, Mizoram, Nagaland and Tripura. Manipur, Mizoram, Nagaland and Tripura. In these states, the limit is only 10 lakhs. So here 14 lakhs is the turnover. Definitely, of course, he has to go for registration. Okay. Now, SSA of Tamil Nadu is engaged in intrastate supply of books, ATO being 24 lakhs. It has another showroom in Tripura, 16 lakhs. Overall value being 40 lakhs. Anyhow, for Tamil Nadu, limit is 40 lakhs. For Tripura, the limit is only 10 lakhs. If you have business in MMNT and other states, lower limit only taken. What is the lower limit? 10 lakhs. The 10 lakhs only will be taken. Here, this crossed the 10 lakhs, so definitely registration is must. Okay. Now, SSA of Tamil Nadu is engaged in intrastate supply of books, ATO being 34 lakhs. And it also supplied alcoholic liquor for human consumption. What is the overall turnover? 34 plus 9, 43 lakhs. So, if he involves in the books, then the limit being 40 lakhs. Any of the aggregate turnover crosses this one, so registration is must. Now the question is where he has to register, sir? Nagaland, does he want to register in Nagaland? No, sir. Because in Nagaland, he is operating only alcoholic liquor for human consumption, which is outside the purview of GST. So, registration in Nagaland is not required, but registration in Tamil Nadu is required. But in this case, registration in Tamil Nadu as well as Tripura, you need to register in Tamil Nadu as well as Tripura. if you are involving operation in 2 states, okay, so you have to register in those 2 states independently, provided in another state where the taxable, there is not at all having any taxable supply, registration is not required in that state, but you have to do the registration in the state where you have the taxable supply. Clear? Now, let's see the next one. Pure Oils Delhi has supplied machine oil and high speed diesel in the month of April as per the details given in table below. Pure Oil is not a registered person, so he is not being the registered person. And supply of machine in Delhi and supply of high speed diesel Delhi, supply of machine oil made in Punjab by Pure Oils from its branch in Punjab. Okay. Supply of machine oil made in Punjab and selling in Punjab. All these things are what? Intra-state supply. Intra-state supply. Now, if you total this comes around 35 lakhs pan-based valuation, and Delhi and Punjab comes under JA and other state. Then the aggregate turnover limit is how much? 40 lakhs. Then what about the registration? Registration not required. What will be your answer if Pure Oil supplied high speed diesel in Delhi in the capacity of an agent of Mixed Oil Limited? Okay. So, Mixed Oil Limited. Now, this one is not includable. 15 and 10 only will be taken. Aggregate turnover being 15 and 10. But anyhow, if he is operating under the capacity of an agent of any taxable person, he has to compulsorily register under section 24. I have not covered section 24. You no need to worry about this. So, I will cover the section 24. If you are being the agent of any taxable person, the day 1 itself you have to do the registration. Day 1 itself you have to register. Is that clear? So, let me cover up the remaining sections here, subsections here. Section 22 has 4 clauses. Number 1 being the general, which covers predominantly. Is that okay? We have covered that in detail and we have seen the illustrations also. And clause 2, 3, 4, these 3 are for the special cases. This second is not required now currently because it's a transition one. Before introduction of GST, if you are registered person under any other tax law, okay, earlier to GST, no, we had excise duty, Tamil Nadu state VAT, and each and every state have their own VAT and CST. If you are being the registered person in that, so in that case, if you are doing any sales in Tamil Nadu, even if your transaction is more than 5 lakhs, you have to be a registered person. So under Tamil Nadu VAT, you register as your turnover is more than 5 lakhs. Now, the moment GST is introduced, 20 lakhs limit is there, still, if you are being the registered person in the old act, you become registered person in the new act also by default. But later, all the persons cancel their registration because they do around 6 lakhs and 7 lakhs. But GST falls around 20 lakhs, no? Most of the person who registered under Tamil Nadu VAT automatically shifted to GST, later cancelled. But anyhow, it is outdated now, right? So, we now have only GST world. Any person registered or holding a license under existing law before the appointed date of this GST, register under GST on that appointed date. Automatically, they will become registered person under GST. It's not now applicable. Is that okay? Now, registration in case of business transfer. If I transfer my business A, he transfers his business directly, not any goods or services. His entire business is transferred. While transferring, A can simply cancel his registration and B need to apply fresh registration. Okay. So, the same registration number cannot be held by B. When a taxable person's business is transferred, succession or otherwise, as a going concern, the business is transferred, the buyer will now continue the same business. the transferee successor must register from the date of transfer and succession. So B has to apply for registration. Of course, A can go for the cancellation and all. And in case of amalgamation and demerger, company A registered, joined with the company B. So company A closed and company B is now formed or merged. Okay, in this case, from the date of registration, okay, when you get the incorporation certification from the registrar of company, B has to apply for the registration. In case of demerger, one of the unit is spinned out and formed a new entity. This new entity should be registered when you get the incorporation certificate from ROC. A registrar of company issues the incorporation certificate. Okay, due to amalgamation and demerger, under High Court or tribunal order, the transferee company, the new entity, must register from the date of registrar of the company issues the incorporation certificate. So, 4 aspects. One is the predominant. If you are master with the one, the rest will be very easy. Second question, the second subdivision is not valid today. Third being the transfer. Okay, going concerns that you will be able to understand logically. In case of amalgamation and demerger, new company is formed means when you get the incorporation certificate from the ROC, you have to apply for the registration. You have to get yourself registered. Okay. Now let me finish up section 24 and then I will go for the section 23. So section 24, compulsory registration under section 24. Under section 24. Person engaging interstate supply should register himself. Okay, if he does any sales from Tamil Nadu to Andhra Pradesh, okay, so automatically he has to register Tamil Nadu to Andhra Pradesh. This is called interstate supply. Okay, A of Tamil Nadu sends the goods to B of Andhra Pradesh, then registration is must, provided except. What's that? Okay. In case of taxable service, 20 lakhs and 10 lakhs limit will be applicable. 20 lakhs and 10 lakhs limit will be applicable. 10 lakhs is what? In case of MMNT. Yeah, other states usually 20 lakhs. And similarly, in case of goods, this is all about taxable service only. I am not talking about the goods. In case of goods, the goods should be notified handicraft goods. Okay, handicraft goods, not all other goods. So, in case of goods, of course, you have to register. So, if you are rendering service from one state to another state, you have to consider whether you are going to do taxable supply of services or goods. Is that limit is within 20 lakhs? Yes, sir. Then no need to register. In case of MMT, the limit should be within 10 lakhs. So not required to register. In case of supply of goods, sir, it should be handicraft goods. Okay, notified handicraft goods. What is called notified handicraft goods? We'll study under section 23. Okay, we'll study there. Clear? Number 1. Taxable service up to a limit 20 lakhs or 10 lakhs. Supply of notified handicraft goods up to a limit of 20 lakhs and 10 lakhs will be applicable. Second being, if you are being the casual taxable person, you have to register yourself except interstate notified supply of handicraft goods up to 20 lakhs and 10 lakhs not required. So, in case of notified taxable person, if you are rendering taxable supply, of course, registration is must. But in case of goods, especially notified handicraft goods, 10 lakhs and 20 lakhs limit will be there. 20 lakhs is for general states and 10 lakhs is for MMMT states. And the same will be applicable for the NRTP. And taxpayer under RCM, if I am falling under RCM basis, okay, then I have to register myself, provided except supplier of metal scrap. If I am being the supplier of metal scrap, I don't need to register myself. Okay, otherwise I have to register. So RCM basis recipient should always register. So these are the 4 category. Apart from that, we'll still go for one more thing. 5 I have to discuss in detail. So let me finish up 6, 7, 8, 9, 10 and 11. Okay. And the person who is supposed to deduct the tax and collect the tax, especially deduct the tax, under section 51, he has to register. So I am not going to be the taxpayer, sir. Because of the provisions given under section 51, I need to be a deductor of tax. Then for the deducting the tax and depositing this tax to the government, you need to have the number, no? For that, you have to register who is called as compulsory register. The person has to compulsory register under section 24. Person required to deduct tax under section 51. And person make taxable supply as an agent for other taxable person. A being the taxable person and B being the agent of this taxable person. Okay. So A being the taxable person and B being the agent, if his supply is just to rupees 100, sir. Okay. Now what about the status of B? Should register compulsorily under section 24. Okay. If A being the unregistered person, sir, B being the agent, sir. What about this scenario, sir? No, not required to register. Not required to register. Okay, if the principal being the taxable person and agent, you should also be registered person only under section 24. And eighth being input service distributor. If you are doing the IST, then also you need to be a registered person here. Now, let me explain IST. Who is called IST? Input Service Distributor. Okay. Now, see, HO and branch office 1, branch office 2. Okay. HO contracts with XYZ entity for advertisement. And XYZ renders common advertisement nationwide for HO, for branch office 2. Now the consideration paid being say 10 lakhs and GST on that being 1.8 lakhs. GST paid on input of services, you can get the ITC. Now tell me, who is able to enjoy this ITC, sir? Whether it is for HO or branch office 1 or branch office 2. You understand, there's a confusion. Okay, so there are lots of branches for your reputed concerns. Samsung has wider branches and Vivo and all the Bata showroom. And they give the common advertisement. Okay, but the payment is made by HO to XYZ. Now the question is, overall GST paid on the input services, who has to claim this? Whether it is for the HO or branch office 1 or branch office 2. In that case, HO will make an IST here. Okay, form an IST here, input service distributor. So this invoice is now sent to IST. This invoice is sent to IST, input service distributor. So 10 lakhs and GST being 1.8 lakhs. Based on this particular invoice, IST prepares their own tax invoice. IST prepares tax invoice. Okay, based on the original invoice. Original invoice is from where? XYZ. Based on that invoice, it's now going to be prepared one more invoices to these three based on their own service enjoyed. Probably HO enjoys 40%. So 44 lakhs, 3 lakhs, 3 lakhs. Come on, tell me. What about the GST for 40 lakhs? Sir, 4 lakhs. Come on, 18%. 0.72 lakhs. Here 0.54,000. Okay. Now IST should ensure the tax invoice prepared by IST in total should not exceed the tax invoice they have the base document. When the verification comes, You have issued the tax invoices to these three entities. HO branch office 1, branch office 2. No. What is the total GST, sir? 1.8. Have you really paid this 1.8 lakhs? Yes, sir. Show me the original tax invoice. So now IST shows the tax invoice received from XYZ. See, I have paid 1.8. That 1.8 is distributed to the 3. Now, HO can enjoy ITC for 72,000. Branch office 1 can enjoy ITC for 54,000. Branch office 2 can enjoy the ITC for 54,000. For this purpose that IST is formed and they don't do any more operations, their intention is to distribute the services to various branches of the same organization so that the each and every entity can claim their own ITC based on the invoice. So this IST should compulsorily register. This IST should compulsorily register. Is that clear? Now, ninth one. In case of online information database access and retrieval services, where supply from outside India to India, okay, OIDR services. In this case, supplier being in USA, okay, probably you have YouTube cloud storage in USA. In India, you are downloading all these things for your enjoyability. For this, the consideration is payable. Then automatically what happens? No, this YouTube should be a registered person, irrespective of the turnover. And 10th one being every person supplying online gaming, online money gaming, the same like from USA, rummycircle.com and all you might have seen, right? So online money gaming from a place outside India to a person in India, whether the transaction is limited within 10 lakhs or 5 lakhs doesn't matter, compulsory they have to register. And such other notified person also be, where you now and then if government notifies some persons, they should also be falling under compulsory registration, the last one. And so in case of interstate supply, only two parties are exempted. Who are they? Rendering only taxable services, and my limit is within the threshold limit given in section 22, then I may be enjoying. In case of supply of goods, I need to supply only handicraft goods. Okay, this 20 lakhs and 10 lakhs threshold limit will be applicable. Otherwise, I have to be a compulsory registration. I have to do compulsory registration. In case of CTP, also I have to go for compulsory registration, provided in case of I'm supplying handicraft goods temporarily for 10 lakhs and 20 lakhs threshold limit, then I may be exempted. And RCM basis, NRTP, and I need to register under TDS. I don't want to register for my supply, but I need to deduct the tax and deposit the tax on behalf of the supplier. Then I have to register under section 51, compulsory registration. And if I am being the agent of taxable person, I have to register. And if I am being the IST, I have to register. OIDR and online money gaming services from outside India to India, also I have to go for registration. And in case of e-com operator, okay, e-commerce operator, okay. So GST complaints also we have studied. Okay. Person required to register. Person required to register under GST in e-commerce. Person required. If he is being the electronic commerce operator, required to collect the tax under section 52. This one being section 51. Okay, TDS comes under section 51. TCS comes under section 52. Okay, Flipkart and supplier and recipient. You know that some cases the supplier should pay. Usually supplier should pay the GST, collect and pay the GST under forward charges. Recipient should pay, then it is coming under RCM. Sometimes the middle party, e-com operator should pay the tax. So for this, Flipkart is responsible to collect the tax from supplier and deposit to the government. Okay, as per section 52, Flipkart has to register. So in this case, Flipkart, whether taxable or not, he has to get registered himself due to the requirement of under section 52. And section 9 class 5, already we studied. Section 9 is all about and charge of GST under forward and RCM, and finally we started discussing the this one, third party. ECO responsible for paying tax and specified services instead of supplier. Then also he has to register. And supplier selling through ECO. Okay. TCS is applicable under section 52. Okay. Person supplying goods or services excluding section 9 clause 5 via e-com operator required to collect the TCS. Okay. If I am being the supplier selling through ECO, sometimes the supplier also required to register under section 24 compulsory registration. And we have the exceptions. Threshold exemptions for the service provider. The 10 lakhs and 20 lakhs service will be there. So in case of 20 lakhs, it's for whom? MMNT. Okay. MMNT. And threshold exemption for intrastate supplies of goods. This is for services. Person making intrastate supplies of goods through ECO can avail the normal registration threshold under GST. In case of supply of services, 2010. In case of goods, normal registration through threshold limit will be applicable. 10, 20 and 40 will be applicable. Is that clear? So with that, we have completed section 22 and 24. So we have completed 22 and 24. Now section 23, who is not required to register? Already we discussed here are there. These persons are compulsorily required to register. Then those not falling under this case, not required to register. Okay, we'll see section 23 easily. Persons not liable for registration. Supplier of 100% wholly exempt or not taxable supplies are done. Okay. So what is called not taxable? Petrol supply being not taxable. Exempt means anything notified under exemption clause. So we have the separate chapter for that. All the supply falls under that exemption, and I am doing the supply of services or goods falling under the exemption category, not required to register. Is that okay? This is an example. Okay, this is an example. We have a complete list under section, under chapter number 4, exemption list. Okay, number 1. In case you are being the agriculturalist, to the extent of supply of produce out of cultivation of land, if you are being the farmer, using the land you are cultivating and buying anything you are harvesting and selling, you no need to register yourself. Agriculturalist being individual or huff cultivating in land by own labor or labor of family or servants on wage payable in cash or kind in under own supervision. Okay, then registration is not required. Supply other than produce out of cultivation of land, liable for registration. Okay. Set is an agriculturalist engaged in cultivation of rice in his field and supplies the wheat also, the aggregate turnover being 33 lakhs. Okay. Set also buys, supplies the wheat, also buys and supplies the wheat, aggregate turnover being 9 lakhs. Is set to register. So overall 33 plus 9, 42 lakhs. As this is more than 40 lakhs, registration is must. Sir, what about the cultivation of rice, sir? Cultivation of paddy is the agricultural product. Rice, converting the paddy into rice is not agricultural produce. Apart from that, he involves buying and selling of wheat. It is not his own product. So he has to cultivate and sell directly. But if purchases and sells, then he will not fall under agriculturalist, right? So yes, he has to register in this case. Okay. Because set is engaged in supply other than supply of produce out of cultivation of land. We assume that this may be purely rather than rice paddy. Paddy being produced and sold, so not required. But in this case, he has to do. You have to add the overall turnover. The turnover is more than 40 lakhs. Definitely has to go for registration. Okay. Third, notified specific category of persons. Reverse charge supplies falling under section 9 class 3 not required. 9 class 3. Okay. Who are they? Director and directorship and the agency. Okay. Recovery agent. All the list we have studied. No. Those falling under section 9 class 3 not required to register. Okay. And interstate supply of taxable services up to 20 lakhs. we studied there. Okay, exemption. In case of interstate supply under section 24, okay, see, taxable supply up to 20 lakhs or 10 lakhs not required for compulsory registration. Then here what happens, up to 20 lakhs not required to register. That's how interlinked these two. C. Person making interstate taxable supplies of notified handicraft goods, notified products made predominantly by hand, up to the limit. Okay. So limit being 20 lakhs and MMT state being 10 lakhs. Provided they have to satisfy the condition that have obtained a PAN and have generated e-way bill also. These are the conditions. So three parties are there falling under notified specific category of person. If I am supplying under RCN basis, falling under section 9 class 3, advocate services, directorship services and sponsorship services and book authors, okay, intellectual property rights, right? In those cases, of course, they no need to register even though their transaction value is more than 20 lakhs. In case of interstate supply of taxable services, then up to 20 lakhs, you no need to register. And third one is notified handicraft goods, where your threshold limit being 20 lakhs and 10 lakhs, but you need to have the PAN. Okay. Now, what is the meaning of notified handicraft goods, sir? Handicraft candles, articles made up of paper mat, coir articles, handbags, pouch, purses, jewelry box, and embroidered article, artware of iron and aluminium. And notified products made predominantly by hand. Second one being notified products predominantly made by hand. Second one. Leather article, carved wood products, wood turning and lacquerware, bamboo products, textile hand printing, theatre costumes, musical instruments, dolls and toys, etc. Okay, this will fall into this case. Okay, examples of that. Now, let's see. Set located in Tamil Nadu is engaged in supply of taxable goods in the neighboring states. So, one state to the other state. What is the supply? Taxable goods. Now, what happens here? Okay, registration is must. Okay, because it is for only taxable services, not for the taxable goods. In case of goods, it should be notified. Handicraft goods are predominantly made by hand. Okay, and aggregate turnover is 15 lakhs. As the aggregate turnover is 15 lakhs less than 20 lakhs, it of course you have to register, because irrespective of the aggregate turnover, you have to register. Okay, because goods, Tamil Nadu to Andhra Pradesh. If it is being services, okay, 10 lakhs and 20 lakhs not required. Not required. In case of notified goods, 10 lakhs or 20 lakhs not required. But in case of other than these goods, this is not considered. Of course, you have to register mandatory. The limit will not be considered. Is that clear? Is set required to register? Yes. Also state if set is engaged in supply of taxable services instead of taxable goods. In case of taxable services, 20 lakhs limit will be applicable. So, registration is not required. Clear? Registration is not required. Three scenarios. Now, in case if I am being the casual taxable person, then notified handicraft goods or notified products made predominantly by hand up to this limit, 20 lakhs and 10 lakhs. Of course, I need to fulfill the conditions. I need to have the PAN and aggregate turnover should be 10 lakhs or 20 lakhs. Now, agent should compulsorily register, as per section 24. But if I am being the agent as per APMC Act, Agricultural Produce Marketing Committee Act, okay. See what happens as per the Agricultural Produce Marketing Committee, all the farmers themselves form a committee. This committee is responsible for collect the agricultural produce sold by the farmers and selling this to third party, and procure the materials and supply it to the raw material to the farmers whatever they are in need, probably seeds and equipments and all, right? And anybody formed as per APMC Act, and if you are acting agent for them, of course you don't need to register. Okay, agent as per APMC Act, commission agent, who is making supplies on behalf of non-taxable person, means that is agriculturalist, is not liable for compulsory registration under this provision, provided he is not required to register under RCM also. So he should not be a registered person under RCM also. Okay, APMC. So, three cases are there in case of persons not liable for registration. Hope you will be now able to understand this. So, we have completed all the three. Who has to register is now you are clear with. Am I right? One more illustration left to be covered. So, I will finish up this one now. Examine whether the supplier of goods is liable to get registered in the following independent cases. Raho of Assam is exclusively engaged in intrastate taxable supply of ready-made garments, goods. So, falls under JA and others. Turnover in the current financial year from Assam showroom is 23 lakhs. He has another showroom in Tripura, 11 lakhs. So, what happens if we add up these two? 34 lakhs. Anyhow, what about the threshold limit? As we have Tripura, MMNT, the limit is only lower number, 10 lakhs. In this case, 34 lakhs, registration is must. Pulkit of Panjim, Goa is exclusively engaged in intra-state supply of shoes. His aggregate turnover in the current financial year being 22 lakhs. Okay, Goa. Goa will fall under John others. The limit is 40 lakhs. So, registration is not required. Harshit of Himachal Pradesh. Okay, Himachal Pradesh falls under JA. Okay, Jammu and Kashmir, Himachal Pradesh and Assam. Is exclusively engaged in intra-state supply of pan masala, but this higher limit is not applicable for pan masala ice cream. So, the limit is only 20 lakhs. So, here the value is 24 lakhs. So, registration is must. Clear? See, if you are doing supply through ECO, naturally you come under compulsory registration, provided exception is also there, you know. So, you need to fulfill some other condition also. Exemption from GST registration for intra-state supplies through ECO. Supplier supplying through ECO to recipient. Usually supplier should register, provided he can also enjoy the benefit. Okay, what supplier should do? Intra-state. Okay. In case of interstate, he is not eligible. He is not eligible. Is that clear? Person supplying goods through an ECO and who has registered under section 52. What about that? He has registered under section 52 for collection of TCS from supplier and pay on behalf of the supplier. He is taking the responsibility. Exempt from registration if their aggregate turnover and his aggregate turnover in the preceding financial and current financial year does not exceed the threshold limit. Okay, will be applicable to the threshold limit. Threshold limit. Okay. What about this one? Goods. Goods. Here we have seen services, no problem. In case of goods, this will be available only on satisfaction of these conditions. On satisfaction of these conditions. Conditions for exemption, he should not have any interstate supply. The supplier must not make any interstate supply. Second, supply restricted to one state or one union territory. Both are same, you know. PAN requirement, supply restricted to one state or union territory. Okay, the supplier must not sell goods through ECO in more than one state. Okay, PAN requirement, the supplier must have the PAN declaration in common portal before supplying the goods. Your PAN detail, business address and state or union territory where supply is made, and it should be validated in common portal. Validated. So we'll see that under registration procedure. And of course, enrollment number. After PAN validation, you will be getting the enrollment number. Instead of GST number, you can use this. No supply without enrollment number. You need to have the enrollment number. Cannot make supplies through ECO if the enrollment number is not there. GST number is not there, but enrollment number. So the enrollment number ceases on registration. Once you register, then automatically GST number will come and enrollment number will be cancelled. Is that clear? It's a temporary number like. Until you cross the limit, you can do the business with the enrollment number. Now, state. Which of the following suppliers are liable to be registered? Agent, supplying goods on behalf of some of the other taxable persons. Its aggregate turnover does not exceed the threshold limit. So, his principal being taxable person. If principal being taxable person, whether the threshold crossed or not crossed, we never bother about the threshold limit. He has to register compulsorily. An agriculturalist who is only engaged in supply of produce out of cultivation of land but aggregate turnover exceeds the threshold. Agriculturalist is not required to register. Okay, specially provided he should not involve in any activities other than cultivation and selling the goods what he cultivates, right? Now, examine with reason whether registration is required under CGST Act in the following independent cases. SSA Computers of Tamil Nadu is providing computer maintenance service. Okay. Aggregate turnover of SSA Computers is 15 lakhs, which comprises both interstate and intrastate. In case of service, no 20 lakhs ceiling will be there even in case of intrastate. Interstate and intrastate, both put together 20 lakhs will be there. So, of course, exempted. Okay. SPB Tamil Nadu supplying its taxable goods in various states of India from its outlet in Tamil Nadu. Okay. So, in case of interstate supply, okay, this condition is not applicable. Threshold limit will not be applicable. Registration is must. Here, registration not required. Here, must. Is that clear? Not required. Here, required. Clear? Now, examine with reason whether registration is required under CGST Act in the following independent cases. Meenu, a supplier in Maharashtra, is exclusively engaged in supply of potatoes produced out of cultivation of her own land within Maharashtra. What happens here? And also outside Maharashtra. No, not required. Not required. Because farmer, okay, farmer, own land, own work and own cultivation, own land. Gino Oil limits oils. Gujarat is engaged in supply of machine oil as well as petrol. Petrol is not taxable, okay, not taxable goods. But anyhow, for aggregate turnover, you have to take this one also. Further, it provides services of refining oil to customers. So, service is also there, goods also there. Then automatically threshold limit is only 20 lakhs. If purely goods, then John, other states, no 40 lakhs will be there, but here petrol and machine oil being the goods and services is also there, automatically the threshold limit is restricted to only 20 lakhs. Total turnover of supply of machine oil is 10 lakhs, supply of petrol being 5 lakhs, supply of service. When you are comparing the aggregate turnover, though petrol being non-taxable goods, yet for the aggregate turnover, you need to add the 3. So if you add all the 3, it comes around 21 lakhs, so registration required. Registration required. Tudu is working as an agent. He is supplying taxable goods as an agent of Tiku, who is registered taxable person. The principal being registered person. Then threshold limit will not be considered here. Registration is required here. Okay. Does not exit 20 lakhs. We never bother about the threshold limit. So we have to compulsorily register here. Clear? Let's now move on to section 25, 26, 27. 25, 26, 27. Procedure for registration, deemed registration, special provision relating to the casual taxable person and NRTP. These are the cases we are going to study. Let me finish off with section 25 and some rules. You have to be master with this. You have nothing here, slight variation here. So once you thorough with section 25, rest of the two being completed like. Procedure for registration under section 25. Where and by when to apply for registration. Okay. So the cutoff date for applying for registration. Every person liable for registration apply for registration in every state or union territory, already told you, in 30 days from the date on which he becomes liable for registration. From the date of liable for registration, he has to apply within 30 days. Already I told you. Threshold limit. Okay. So until that time you no need to register. The moment it crosses, you are liable for registration. Liable for registration. If this date being say 1st July 2025, within how many days you have to register? Within 30 days you have to apply for registration. So 30 days means in July you leave that one date, add 30 days, so 31/7/2025. This is what about the cut-off date for registration, application for registration, cut-off date for applying. Okay. This period you have to apply. This period you have to apply. After application, it takes at least 10 days also to get your registration confirmed. Probably registration certificate, registration confirmed. Okay. Registration confirmed and you got the GST number. Assume this being on 15th August 2025. 15th August 2025. The moment you are liable for registration as per section 22, 24, whatever it may be, or if you go for voluntary registration, whatever it may be, from the date of liability, you have to apply for registration within 30 days. If you apply within the 30 days, sometimes later you will get the registration certificate and you got the GST number allotted. Now, what is the effective date of registration for your purpose? Effective date of registration. Effective date of registration in this case is equal to liable for registration. Liable for registration. What is the date liable for registration? 1/7/2025. You applied exactly on 25th July 2025. You are shipped. This is the date you applied. Clear? Suppose if you apply on 2nd August 2025, this is the date applied for. You violated the condition that you have to apply within 30 days. You violated. If you violate, then in this case, effective date of registration is equal to the date of receipt of registration. Date of receipt of registration. Registration as well as receipt of GST number. 15th August 2025. 15th August 2025. Is that clear? Clear? Now, what's the advantage and disadvantage? we have studied in tax invoice. What's that? If you applied within the stipulated date mentioned in the registration act, okay, this section 25, for this period, whatever the invoice you raised, it is nothing but bill of bill, okay. Okay. Instead of this bill, now you can issue the tax invoice. This is called revised tax invoice. Clear? And you are eligible for the ITC also. You are eligible for ITC also. Clear? See, if you are doing everything promptly, you purchase, okay, if you are purchasing, the purchases between 1/7/25 to 15th August 25 being 10 lakhs, for that GST 1.8 lakhs is paid. You can get this GST as your ITC. 1.8 lakhs you can get the ITC. Is that clear? And the supply done by you during that period 1/7/25, 15/8/25, say 20 lakhs and applicable GST being 3.6 lakhs. Okay, for this you can issue the revised tax invoice and you can collect this one also from the customer. You can collect the 3.6 from the customer. You collect 3.6 and you 1.8 lakhs paid on purchase can be credited in your electronic credit ledger. So 1.8 lakhs you have to pay the tax. Now what is the ultimate outflow in your hand, or what is the profit in your hand? 20 lakhs being your sale consideration, 10 lakhs being your cost, surplus 10 lakhs. This 3.6 you collected, this 1.8 already you paid is now collected. So ultimately you are paying only 1.8 lakhs. This 1.8 lakhs is nothing but tax paid on the value addition. Tax paid on the value addition. Now what happens if you fail to do so? Green color, okay, you fail to do so. You purchased goods for 1/4/25 to 15th August 25. Worth rupees 10 lakhs and 1.8 lakhs you paid. Can I claim the GST as ITC? No, you are disallowed. And you are supplying to the recipient, you know, supply being 20 lakhs and the GST payable on this being 3.6 lakhs. GST payable on this. Now the question is, can I collect from the customer? No, you cannot collect from the customer. You can collect only 20 lakhs. This 3.6 lakhs you cannot collect, but you have to pay. So now what is the GST payable here? 3.6 lakhs GST is payable by you. GST payable by you. Now 20 lakhs is your revenue. 11.8 lakhs your cost, because 1.8 is not refunded. Ultimately your profit is 8.2 lakhs and you have to pay the GST and the output also, which is 3.6 lakhs. So ultimately 4.6 lakhs. 4.6 lakhs is your profit. Earlier you got around 10 lakhs and 1.8 lakhs maybe lakhs. But now you have to pay your profit is only 4.6. Of course, in this case, okay, whatever the amount you collected, you know, is considered as inclusive of tax. So tax rate being 18/118. That's how you can get it. It's not directly 20 into 18%. 18, the entire amount what you collect from the customer is considered as inclusive of tax. From that you have to pay 18%, means 18/118 tax is payable by you. Is that clear? So because of the reason, you are now compelled to apply for registration within 30 days from the date of liable for registration. Is that clear? Now, determine the effective date of registration in the following cases. The aggregate turnover of Dampur Industries Delhi has exceeded 40 lakhs on 1st September. 1st September. This is the liable date for registration. Liable for registration. It submits the application for registration on 20th September. 20th September. Application. And what are the cut off the date? Cut off date is 30 days you have to add. In September 30 days, leave that one day. That date is skipped 29. Another one day may be 1st October. So 1st October will be the cut off date. So he has applied within the cut off date and registration certificate he received on 25th September. Then what is the effective date of registration? The date liable for registration will be the effective date of registration. Is that clear? Mehta Teleservices is an internet service provider in Lucknow. Its aggregate turnover 20 lakhs exceeds on 25th October. 25th October being liable date for registration. And what is the cutoff date? You have to add 30 days. In October, 25 days, 31 days, 25 already over. Still how many days we have? 6 days. For 30 days, another 24 days. Okay. Maybe in November. So 24th November will be the cutoff date. Now, it submits the application on 27th November. So application being after the cutoff date. 27th November. Now, date of granting of the registration being 5th December. Now, what about the effective date of registration? 5th December will be the effective date of registration. Clear? Main procedure is provision is over. Provided in case of casual taxable person and NRTP, you know, he is going to do the operations only for temporary period. Clear? 3 months or 2 months. In this case, how can we consider about the threshold limit? He himself is going to operate only for few days. Apply for registration at least 5 days prior to the commencement of business. Along with the estimated GST he is supposed to pay. Should also be paid now. Is that okay for the CTP and NRTP? The case for the CTP and NRTP are more or less same. Only one difference. What's the difference? In case of NRTP, usually while applying you need to submit your PAN and Aadhaar. But what happens in case of NRTP? He will not have PAN and Aadhaar. So instead of PAN and Aadhaar, we need to get the passport details or the tax document or tax identification number in his country he has to submit. Along with an approved person, his authorized person should be in India, whose PAN should be attached. That one difference is there between CTP and NRTP. The rest of the things are the same. Usually from the date of liable within 30 days, but in case of CTP and NRTP, 5 days prior you have to apply. Is that clear? In case cess and cess developer, a separate registration is also applicable for cess and cess developer. In case of cess, you no need to usually pay the GST. Okay, most of the cases exempted. But though exempted, for all the purchases you pay the GST, you know, that you can claim as ITC and you can even claim that refund also. For that, you need to have the registration number. So, your registration number is totally different. So, cess and cess developer. Is that clear? Point number 1. Procedure for registration. Second, registration should be for state-wise. You are not applying for nationwide, only for every state. If you operate in 3 or 4 different states, you have to apply separately for each and every state and union territory. One registration per state. If you are operating multiple districts in the state, no problem, you can have only one registration. But if you operate in 2 different states, then you need to have the 2 different registration. Single registration for different branches is allowed only if all branches located in the same state. Okay. So, in Tamil Nadu, I have 3 businesses, 3 different districts. Okay. Then I can have the single registration and I have to disclose principal place of business as well as the additional place of business. This is head office, this is branch office. So, you have to declare all these things. Okay. If I have business vertical, then I can have 2 registration number for the same state. Okay. So, you see, I have SSA as well as SBB. Okay. In Tamil Nadu. This will be for coaching. This will be for supplying the books. Buying and selling of books is done by SBB. Can I have the separate GST number for this as well as this? Yes, of course, I can have. This will be called a business vertical. Within one state, you need to have only one registration. Okay, but within the same state, you have two different categories of business. You can have two different GST number. That is called business vertical. Separate registration for different business vertical granted, provided all separately registered business vertical pay tax on supply made to the another registered business vertical, but provided if there is any supply from SSA to SBB, GST will be leviable. Okay. So if you have the same SSA and SBB are under the same roof, supply between these two will not be applicable for the GST. Second point. Now, third one. Sir, can I go for voluntary registration, sir? Yes, of course, you are eligible for voluntary registration also. So, if you want to go for voluntary registration, what could be the provisions? The same provision will be applicable. Okay. Why do I want to go for voluntary registration, sir? Okay. To claim the ITC as well as to collect the GST from my recipient, and recipient is also eligible for claiming the ITC. If I am not being the registered person, whatever the supply I do know, for that the recipient cannot claim the ITC. Okay. If I am being the composition levy scheme, or if I am in the non-taxable person, then automatically what happens? Whatever the input tax I paid, no, I cannot claim. As I am not eligible for claiming, even my recipient is also not eligible for claiming. He says, be the registered person, I can claim both myself. That advantage he will enjoy. Is that okay? That's why sometimes the registered person may compel his supplier to be a registered person. So to make you understand, let me see here. A supplies to B, supplies to C. He is being the registered person and he is also being registered person. He is not being the registered person, unregistered person. 1000 and GST paid on this being 180. And for B, as he is not eligible for ITC, 1180 being the cost for him, and he adds 320 or 500 being the value addition. So 1680 being the sale value. He sells it to registered person, probably his value addition being say 120. So 1300, he sells 1300 to registered person, and he has to pay the GST at the rate of 18%. Come on, 18% on this. 234. So 1534 will be the ultimate cost for C, or 1300 being the ultimate cost. Anyhow, he can recover this, okay, output tax. GST can be collected from the customer, his customer. Now, A being the registered person, B and C being the registered person. Now, C demands B to be a registered person, asking him to apply for registration. Sir, I need to pay the GST. No issues, you pay the GST, I will pay. So, 1000 and 180. This is cost and this is GST. Is that okay? Overall value being 1180 payable by B, but cost for him being 1000, this 180 he can get it back as ITC. Isn't it? If he is being the registered person, he can get the ITC. What is the value added by B? 120. 1120. Okay, 1120. This is GST. ITC. He can claim the ITC here. For 1120, 18%. What is the GST payable by B? 202. 202. Okay. Now, B 208 minus 180, 22 is the tax payable by B. And for C, how much he has to pay? 1120 for this, and 202 he gets ITC. The value addition may be 0. You assume that value addition being 0. And what about the GST payable on this? 202. 202 minus 202, 0. So now, if B is being the unregistered person, C has to pay 1300 for the product. and B being the registered person, C will pay only 1120. Means the GST paid by A can be enjoyable by C if B being the registered person. In the chain, if the B being unregistered person, the GST paid by the original supplier A, which is now totally forgotten by C. So C will compel B to register himself so that he will also be enjoying. C is also eligible for claiming the ITC GST paid by B to A also. That's the advantage. That's why sometimes, though I'm not supposed to register, I may go for voluntary registration also for the benefit. A person obtained more than one registration is treated as distinct persons. Already I explained. What is that? Distinct person and establishment of distinct persons. Establishments of distinct persons. Already I explained, right? While transfer from one state to the other state between the related persons, distinct persons are establishments of distinct persons. That one is defined under section 25. Already told you. So this is all about the section 25. So under this only, if I have two registration number for Tamil Nadu as well as Andhra Pradesh, I am being the cost accountant, I am running my cost accountant business in Tamil Nadu as well as in Andhra Pradesh. I need to have the one registration form, registration number here and there. Here, Sridhar in Trichy is totally distinct persons to Sridhar in Andhra Pradesh. If I have the establishment, and these two establishment in Trichy as well as establishment in Andhra Pradesh, under two different person, then that will be called as establishments of distinct persons. A person who obtained registration in a state, union, territory in respect of an establishment. I have an office here. It's an establishment. Singar Academy. There, Singar Books and Publication. It is also an establishment. That is also an establishment under my own banner. Then these two are called establishment of distinct persons. Okay. And while applying, you need to have the PAN number, okay, or TDS and TCS account number you need to maintain, except for whom? NRTP. NRTP will not have the PAN number, so for registration, NRTP has not required to submit PAN number. And while applying, you have to give the authentication, you have to sign. You submitted your form, no, form should not go empty, it should be signed. By whom? Authorized person. Okay, so authentication for every registered person. Usually, Aadhaar number or other proof is must. Aadhaar number or other proof. Okay, unless you submitted this will be invalid. Okay, why Aadhaar and other proof? In case of individual, Aadhaar is applicable. For the other than individual, what happens then? The Karta or head whose Aadhaar number should be attached. Okay, in case of individual, authentication for grant of registration is along with the Aadhaar number. Other than individual, authentication for grant of registration in case of HUF, Karta number, MD number, whole time, partner, members of managing committee of association, board of trustees, authorized representative, authorized signatory or such other notified persons. Okay, so their Aadhaar number should be there. Okay. Or you need to submit other proof if Aadhaar number is not available. Aadhaar number is not available. In case of NRTP, you need to give some other document also. But anyhow, you need to appoint one representative from India. And authentication not applicable. Any state or union territory or other notified person. For them, authentication not applicable. Okay. For example, a person who is not a citizen of India. Okay, a class of persons other than the following class of persons: individual, Karta of HUF, authorized signatory of all types, managing an authorized person, partner. Okay, these are called notified persons. Okay, this you can skip. Now, we will go for the 9th point. Unique identification number. Usually, if you are applying for registration, you will get the GST number. Okay, usually. But in case if you are being any specialized specified agency of UNO, then you will apply for registration, but you don't get GST number, you will get UIN number, unique identification number. Because whatever the supply done by UNO to the others, for them GST is not applicable. GST is not applicable. Whatever the input supply they get it, for that whatever the GST they paid, they can get the ITC. Of course, there is no any GST payment. So whatever the ITC they have, they will be eligible for refund. For the refund, claiming the refund only they registered. It is not general registration, it is special registration where the GST paid on purchases can be treated as ITC, and of course whatever the supply they do, they don't collect any GST as there is no GST liability to pay. GST they paid is refundable directly. Then who are they? UNO agencies. Any specialized agency of United Nations organization, multilateral financial institution organization notified by UN Act. One is financial institution and organization and a specialized agency. Embassy, consulate, embassy of foreign countries. Any other notified persons. These are the 4 category persons. Okay. Specialized specified agency of UNO, multilateral financial institution organization notified by UN Act, consulate and embassy. Okay. Embassy, you will have only one embassy in a nation. Okay. So, for example, if there is an embassy, American embassy in Delhi, for whatever the purpose like visa and all the things, you have to go to embassy only. Okay. So, what happens now? Traveling from Rameshwaram to Delhi, it's really tough. There will be a branch like in Chennai and other locations so that it will be easy accessibility for some specific purposes. Those things are called branches but named as consulate. So, for any nation, they can have embassy in India, but only one embassy is permitted. Others, they may have the outhouse that's called consulate. And for them, they can apply for UIN number, not GST number. Okay. A person having UIN is not a registered person. He is considered as not registered person and not a taxable person. He is not a registered person, he is not a taxable person. But UN is needed to claim a refund of taxes paid on purchase of the material, right? UN issued in form number GSTR REG 6. So, for them, they will get the GST REG 6 form. GST REG. REG represents registration form. Okay. So, you usually apply for registration under GST REG 1 form. You get the application sanction. Registration is compulsory and form number 2. But form number 6 is for the whom? For the UN agencies, for UAN number. Within 3 working days from the date of application, after receiving a recommendation from Ministry of External Affairs, they have to get the recommendation from Ministry of External Affairs, so you'll get the UN number. 10th one being suo motu registration. Now, though your threshold limit is more than 20 lakhs or 40 lakhs, but you don't register. You plan to hide, but the proper officer of GST gets some doubt that your threshold limit is higher or you will be required to register compulsorily. Whether you apply it or not, the proper officer will register your name and registration number will be given voluntarily, suo motu, automatically given at their own stand. Okay. Proper officer on inquiry may issue a temporary basis. Then you say, so, supplier, recipient, proper officer issued GST number to you temporarily, stating that you have to pay the GST. Immediately what you can do? Sir, no sir, my threshold limit is not reached sir, my transaction value is only 5 lakhs sir. You prove and argue with them to cancel it. Yes, yes sir. Sorry, I missed. It's 50 lakhs only. Then you can go for regular registration within 90 days. Within 90 days. Submit an application for registration in prescribed form within 90 days from the date of grant of temporary registration. Or file an application against temporary, sir. No, sir. Registration is not required, sir. You can file. But if the appellate authority upholds the liability, no, you have to compulsorily go for registration, your statement will not be accepted, then no other way. You have to apply for registration within 30 days. So, if the proper officer grants the GST number suo motu, you have to go for regular application within 90 days, or you can argue with them. So, stating that I am not liable. So, if you go for arguing with them, then after that your argument may be accepted or it may be cancelled. If it is cancelled by appellate authority, then automatically within 30 days you have to go for the regular registration. Is that clear? So with that we have completed section 25. Okay, section 25 is over. Then what about the rules are? How to register? How to register? The procedural aspects given in rules, so we have to cross-refer the rules for the procedures here. Now, rules. General procedure for registration. General procedure for registration. This one is not applicable for NRTP, TDS, TCS, OEDR. For all others, this procedure will be the same. And for CES and CES developers, you need to apply separately, separate registration. Okay. GSTR registration, one form is for the application, and then you will get the registration certificate automatically in GST REG 6. Okay. While filling the REG 1 form, you have to fill in two parts, part 1 and part 2. Go to the GST website. Okay. Here is registered directly. You have this one, new registration. This is the format. New registration and temporary reference number. Select who are you, taxpayer, tax deductor or tax collector 51 or 52, or you are being the GST practitioner or NRTP, UN body, consulate or embassy, other notified person, non-resident online service provider and online money gaming supplier. You have to choose your category if you are being taxpayer. In which state you are going to register. The state where you are operating is the place where you have to register. So Tamil Nadu. And district. You can choose your district. Tiruchirappalli. And you have to give your legal name as mentioned in PAN. Now you have to feed the PAN detail. You have to feed the PAN detail. Okay. If you don't have the PAN, no other way, you have to apply the other way, and you have to apply first PAN. You enter the PAN details and enter your email address, mobile number. If the PAN number is fed here, it will be automatically verified with the CBDT data. They have no income tax department, so Department of Direct Taxation. So they have. This will go and verify there whether it is correct or not. And in case of email, OTP will get in email address. You have to confirm that. This is how you can authorize your email is correct. Mobile number and separate OTP is generated on that also. And type the characters and proceed. This is called part 1. Once you complete this procedure, you will get the temporary reference number. Then with that temporary reference number, you can go further. Is that clear? See here. Part 1. Apply in Part A in Form GSTR REG 1 on GST Common Portal. Declare PAN, mobile number, email address, state and union territory, and you have to validate. PAN will be validated automatically by referring to CBDT database. Mobile number and email address validated using one-time password. then you will get what? TRN is generated and communicated in validated mobile and email address. This is the first process. In part 1, this is part A. In part B, using the TRN number, you have to further apply your details, upload your details, right? Using TRN, submit application electronically in part B, along with the requirement documents like in case of business, constitution of business, who are the partners or who are the owners and directors, jurisdiction where it is applicable, option for whether you are going to composition taxpayer or regular, when did you commence your business, reason for registration, address, bank details, authorized signatory, everything will be updated. Details of bank account can be furnished later also. Even while applying, you don't have the bank account, doesn't matter, you can apply. You can apply it later, whichever is earlier of. Date of registration plus 45 days. Date of registration plus 45 days. Okay, once you get the registration, from there within 45 days, you have to give the bank details. The date of return to be furnished under section 39. Between these two, whichever is earlier will be the due date. Okay. This relaxation is not applicable for the TDS and TCS and in case of suo motu registration. In these three cases, this relaxation is not there. So, usually you have to give the bank details also. An authentication of Aadhaar number also be given in case of CTP. Deposit of tax in electronic cash ledger in advance. In case of CTP, okay. Temporary, okay. In case of temporary case, you have to first deposit casual taxpayer. First deposit the tax in advance. You no need to wait for the sales and get the tax and deposit. You have to deposit the estimated tax ahead. In case of CTP and NRTP also the same case. But anyhow, NRTP provision is different. And you will get the acknowledgement electronically. This is your part. How to apply. You go and do all this registration online. And once you registered, then thereafter it's a department side procedure. So procedure by proper officer. What will they do? They will examine the application and other documents submitted by you. If the application in order, registration is granted in form GSTR REG 6. So GSTR, how should be the GSTR forms, especially GST REG form? Okay. INS form is all about inspection and search, not applicable at your level. Let's see. Yeah. Form GSTR REG 1. This is the application form format. Application for registration part A. Anyhow, you will apply this in online only, right? Email address, mobile number, all these things we have already seen in online. Part B, you are going to give all the details. Once you applied in GST REG 1 form, these are the particulars you have to submit. Right. Now, so you have to give all the details. What are the services you are undergoing? Okay. This is REG 1 form. Now let's move on to the form number 6. Once again, it's very slow. Big file size. Everything is pre-structured. Whatever it may be, no need to worry about the format of applying. Go and see those formats. It's already available here. Once again. REG2 is the acknowledgement form. You will get the acknowledgement in your registered mail as well as phone number. REG-C, any additional information if department expects from you to process your registration, they will send in this format. REG-4, clarification, other things, how can you give? Once registration is confirmed, this is the format. You have to display this in your principal place of business as well as additional place of business. Okay. One second. Where did we see? Okay, I need sixth form, right? The format you'll see. Of course, not required to memorize all these things, so it's only for understanding purpose. Acknowledgement, okay. Clarification. And additional clarification. Rejection of your application, 5. Yeah, this is form GST REG1. So you have to display this in your shop, stating that you are a registered person and you are eligible for collecting all these things. Is that okay? With the government symbol, Government of India, your GST number along with legal name, trade name, constitution of business and address of principal place of business, date of life from when you are liable, and validity of the GST, type of registration, is it composition or regular? So all these things are printed in this. Okay. You have to display this also in your shop, stating that you are a registered person. So this is a form you will be getting that you have been confirmed registration. If application is not in order, PO issues notice electronically for clarification in 3 working days. Okay, after application, if it is not in order, if there is anything missing, within 3 days you may be expected to give the clarification. You have to respond for that. Notice may be issued not later than 21 days from the application for submission date. Okay. In case of Aadhaar authentication, 21 days. After the 3 days notice, you have to give the clarification in 7 working days. Okay. If everything is in perfect, within 7 working days, PO will give the registration within 7 days. Or within 7 days, it may be registration may be rejected or issued. Okay. If it is rejected, and of course, a clarification also be sought. clarification like modification, corrections, and other things. So that's how the procedure by the proper officer is carried over. So only 3 working days, within that they have to ask for clarification. In case of other, 21 days may be taken. Once clarification is sought, then you have to respond for the clarification within 7 days. From the date of receipt of clarification, within 7 days, either allotment of registration is confirmed or rejected with the seeking any clarification further. Is that clear? Now, deemed approval. Within 3 working days, okay, if the proper officer failed to take any action, your registration is confirmed. On apply, so from the date of application, within 3 days, if you don't get any clarification request from the proper officer, definitely it is allotted. In case of Aadhaar related, 21 working days. And if there is any rejection, you can give the clarification. From the date of clarification, within 7 days, you need to get either approved or rejected. Yes, automatically your registration is confirmed. This is called deemed registration. To speed up the process. Now, Aadhaar authentication. In case of new applicant, date of submission of application is whichever is earlier of the date of authentication of Aadhaar number or 15 days from the submission of the applications in Part B in form number GSTR1. So within 15 days. In case of existing person, you have to do the authentication. If you are being the fresh person to apply, okay, the Aadhaar authentication is must that you have to do this one. But if you are already registered without Aadhaar, now you have to give the Aadhaar. While introducing this GST registration, no, Aadhaar was not questioned. Thereafter, they started asking questions, interlink the Aadhaar also. If you are going to be the new registration, then the day one itself you have to give the Aadhaar also. Okay. Where Aadhaar is not asking, sir, I didn't get the Aadhaar, sir. Okay. In this case, registration is granted only after physical verification. Okay. Or any other verification of such other documents he may deem fit. Okay. This will be done for a new person. If you are already registered person, need the Aadhaar authentication to be done immediately. Otherwise, your GST number will be invalid. That Aadhaar authentication is routed through OTP. Okay. When the GST came into force, Aadhaar was not asked. Thereafter, Aadhaar also made mandatory. Right. Now, other points to be noted here being physical verification. Currently, what happens, once you apply for registration stating that my business operations is in Trichy, this location, then the proper officer will come for the physical verification, is it correct or not, or you need to upload the photographs along with the geo marking in the GST common portal within 15 days. Okay. So, with the geo marking. And you will get the registration number under GST REG1. GST number which is PAN based. Okay. This will be around 10 numbers, PAN number. In front you have 2 digits for state code, Tamil Nadu TN like, and another 2 code is for the entity, whether it's a partnership firm or sole trade or half. Last one being cross verification checksum. Okay. GST should be displayed on the name board at the entry of principal place of business as well as additional place of business. This REG 6 form, you have to take the printout and display that in your place of business. And effective date of registration already we have completed. Okay. Section 25 is over. Now let's move on to the section 26. Deemed registration. Deemed registration. The grant of registration UIN under SGST or UTGST, automatically registration granted under CGST. Okay. If you got already registered under SGST, UTGST, automatically you got registered under CGST. If your registration is rejected under this, then automatically it is rejected there also. This is what about section 26. 27 is all about special provision for CTP and NRTP. Special provision for CTP and NRTP. 3 sections, 26, 25, 26, 27. 25, where we have discussed all these things in detail. 26 is very simple. If registration is confirmed in state, automatically registration is deemed to be confirmed in CGST also. Their cancel means they are also cancelled. In section 27, we are going to discuss about CTP and NRTP. In this case, you have to apply at least 5 days prior. Along with the application, you have to give the estimated tax payable also, right? CTP and NRTP get compulsory registered at least 5 days prior to the commencement of business, and CTP will apply in normal form with the PAN number in case of CTP. But in case of NRTP, self-attested valid passport should be given along with the application signed by his authorized signatory who is being an Indian resident with this valid PAN. So, if he is being the non-resident, he will not have the PAN or Aadhaar, so he will submit his own passport. Apart from that, his authorized signatory will be in India. No, he has to submit along with his own PAN. Also, NRTP should submit tax identification number applicable in his country. Is that okay? Hope you will be now able to understand the difference between CTP and NRTP cases. And the validity period of this CTP and NRTP being only 90 days or period specified. You may operate for 1 month, sir, or 90 days, whichever is earlier will be taken. So, if you say, I want to operate 100 days, no, you cannot go. So, period specified here are 90 days. Between these two, whichever is lower will be applicable. So, you first get the CTP and NRP for 90 days. If you want to further extend, you can extend another 90 days also. Maximum 6 months only allowed. So, effective date being only 90 days, but extendable further 90 days. Okay. And you have to deposit the tax in advance before applying itself. So, you have to estimate what is your business size you will plan to do in 6 months, 3 months case. And based on the estimation, you have to pay the tax in advance. Now, in order to eligible for grant of registration, a person must have permanent account number under Income Tax Act 1961, state one exceptions, to whom this PAN is not required. For NRTP, PAN is not required. Clear? Now, what are the advantage of taking the registration? It's a theory question. You can read it easily because everything is legalized and streamlined, and you will be getting the GST collecting ability as well as GST paid on input can be received as ITC. And what are the advantages of voluntary registration? Already I told you, you have the rights to claim the ITC, and that ITC claim will also be passed on to the next recipient also. And you can have the views over that. So, with that we have completed the 3 sections. So, first 3 section is related to the person responsible for registration. Second 3 section is for the registration process. And now we will deal with the amendment of registration under section 28. Okay. So, your GST number is based on what? PAN number. So, from this it is very clear you cannot amend the PAN number. If you want to amend the PAN number, you have to surrender the PAN number, cancel that, and you have to apply fresh. But if you want to shift from one state to the other state, yeah, of course your registration is for a state only. If you want to shift from one state to the other state, you have to surrender here and apply fresh state. But within the same state, if you are transferring from one location to another location, then you can do it, no issues. And if you want to change the mobile number, email ID, there will not be any harm. So, changes in case of PAN or principal place of business and additional place of business from one state to the another state. Not possible. This is not possible. So, you have to cancel the existing registration, you have to apply fresh because your GST number is itself PAN based. If you want to change the PAN, it's just not possible. As well as you register in one state, if you want to move to the another state, which is also not possible. And you have classified, so all the details you feed in your registration time, those fields are classifiable as core field and non-core field. In case of non-core field, okay, you can change yourself, automatically it changed. But in case of core field, especially name of business, addition, deletions of stakeholder, principal place of business as well as additional place of business within the same state, not the other state, within the same state. These are called core field. Other than that, like email, mobile number are called non-core field. In case of core field, okay, if you want to change the core field, what happens? Inform the proper officers for amendment in 15 working days from the date of change you have initiated. Right. And PO may approve or reject within 15 days. Clear? But in case of non-core, you just change yourself automatically. It is authorized based on OTP. Change in case of non-core fields, certificate stands amended on submission. See what happens in the case of core field change. It should be accepted by the proper officer. If he rejects, what happens? We'll give 7 working days for giving your explanation. So you can give the clarification also. Based on the clarification, it may be amended within 7 days or cancelled. Any rejections or modification in SGST, this will be the deeming provision. If any change happens in SGST, automatically it is assumed to be changed in CGST also. Okay. And application, amendment applicable prospectively only. If I change today, this change will be applicable from today only. If I want to change this 3 or 4 years earlier onwards, which is not possible. Okay, if you want to do so, then you have to get the order of commissioner. Okay, commissioner's order. So this is what about the procedure of amendment under section 28. Now, section 29, cancellation of registration. So 29 cancellation, 30 is revocation of cancellation. So you applied and your application wants to be cancelled. So how can you cancel? Okay, so here you have to understand 4 predominant points. Point number 1, 2, 3, 4. Point number 1 is nothing but in a genuine case you are cancelling. In genuine case you are cancelling. In case of 2 violation, okay, in case of 2 violation, okay. So 1 and 2. 3 being a procedure of cancellation. 4th being any condition to be fulfilled. We'll see that 4th case later on, which is very, very important concept. So number 1, I want to stop my business. You can stop and you can apply for the registration. Or the owner may died, and instead of he himself, then his representative may apply for cancellation. Or business remains not continuance for a longer period, then what happens then? The proper officer may also cancel. These are the genuine case. Cancellation either by proper officer or his own motion or by his registered person or his legal heads can cancel in genuine cases. In case of death of such person. Business discontinued, transferred fully other than the reason of death, amalgamated with other legal entity, demerged, disposed, constitution of business is changed, taxable person is no longer liable for registration. His turnover is less than 20 lakhs. Earlier he had around 30-40 lakhs, so he registered. Now his turnover is only 5 to 6 lakhs, so he doesn't want to register, so he can cancel. This cancellation be done by he himself or his representative or his legal head or proper officer may also cancel. Okay. Now, temporarily it may be suspended. Rather than cancellation, it may be temporarily suspended during the pendency. Okay. The date of submission of the application or the date on which the cancellation is sought. Okay. So you applied for cancellation on 1st January 2026. You want to cancel from 1/4/2026. During this period, it is called suspension. It is called suspension temporarily. Okay, because something will be checked, like once your cancellation is confirmed, you are not eligible for the ITC. Similarly, you are not eligible for claiming the GST. So you have to fulfill these conditions. Whether you are following these conditions or not is going to be verified. No, that's called pendency from department side to verify. So during that period, it is suspension. During suspension, not to make any taxable supply or no return filing is required. In this period, you no need to file the required return and you should not do any supply here. Suspension is revoked on cancellation. Once completely cancelled, the suspension is cancelled. Thereafter, you don't have any registration with them. So this is genuine case. This is genuine case. 29. Second point is all about not genuine. Okay, maybe. Registration can be cancelled by proper officer only. That too, cancellation will be done retrospective date also. Usually, application for registration will be prospective nature, but in this case, retrospective date also be possible. Is that okay? When you are violating the act, contravene the provisions of the act, and who is already paying the tax under composition levy, but who has failed to pay or furnish the return for the financial year. If you are paying the composition levy under section 10, you need to file the return monthly or periodically once. If the return is not paid, means filed beyond 3 months from the date of furnishing the said return, okay, then automatically your registration may be cancelled by the composition, means proper officer, and a person paying tax has not furnished returns for continuous 6 months. For 6 months, okay. In that case also, other than composition, in case of composition taxpayer, financial year, here monthly return. So monthly return not filed with for 6 months also be cancelled. In case of voluntary registered person, not commenced business, he says I want to register myself, sir, but after registration he has not started his business for 6 months. Then also cancellation will be initiated by the proper officer. And registration obtained by means of fraud, willful misstatement, suppression of facts. In this case also, PO will cancel. While cancelling, they will give the opportunity being heard. Ask for your clarification, based on that the cancellation will be done. And why it is called retrospective date, sir? Okay. For example, 1/1/2025, 1/1/2026. In this date PO order, your registration is cancelled, not here, from this date onwards. So, effectively the proper officer cancels from this date only, prospective means, but he says, no sir, your registration cancelled not from this date. Registration is cancelled from 1/1/2025. If it is so, whatever the ITC you claimed, you have to refund. So, you might have claimed the ITC, you are being the registered person from 1/1/2025 to 1/1/2026 as you are being the approved person, a registered person. On 1/1/26, PO cancel your registration, stating that you means avail this registration fraudulent way. So I am going to cancel not from today, cancelling from 1/1/2025 from that date. Then from that date, whatever the ITC claim should be refundable along with the interest and all. So they have the rights to cancel retrospectively. This will not be applicable in the first case. First one being the genuine, second one being the violation. Right. Now, so how can you go for the cancellation, sir? The procedure for cancellation. Apply for cancellation electronically within 30 days from the date you stop consuming, and furnish the details of inputs held in stock, contained in semi-finished, finished goods or capital goods and liability thereon. So you have to give this detail. So apply 30 days and you have to give this detail. PO may cancel in 30 days. Okay, where PO cancel registration suo moto, he shall issue show cause notice with 7 days for replay. Suo moto. Okay, if the PO he himself cancels, then he will give the show cause notice also. You have to give the explanation why you should not cancel. That you have to give the explanation. And proper officer may direct to pay pending tax and dues, if any, before the cancellation. Up to the cancellation, whatever the tax liability is there, he has to pay. No, he has to pay. And if the cancellation is done for the SGST and UTGST, automatically in CGST also cancel. Here, very, very important point being this one B. You have to understand the point B here. Is that okay? Point B is very important. Now, 1/1/26, you apply for cancellation. You apply for cancellation. Immediately what happens, you have to furnish what? Stock, raw material stock, and raw material component available in work in progress stock, raw material component in finished goods stock as well as capital goods all. Capital goods all. Clear? You have to furnish these details also. Clear? Why? For example, 1/10/25 to this date, you purchased 10 lakhs rupees worth of goods where GST paid on this being 1.8 lakhs. If you are being the registered person, in this period you are being the registered person. If you are going to be the registered person, you will be getting ITC how much? 1.8 lakhs you get this. Why you will be eligible for ITC? Because using this material you will manufacture finished goods which is going to be taxable. Further you have to pay the tax. If you are going to be the unregistered person, you are not going to you are not eligible for claiming the ITC. You are not eligible for ITC. Okay, but if you are being the registered person, you have to pay the tax and you can claim the ITC. Stating that you are being the registered person, you claim the ITC on the input goods purchased for 10 lakhs, 1.8 lakhs. But on this date, out of that 2.5 lakhs worth of goods remains unutilized or unsold. What does it mean? Hereafter, the 2.5 lakhs worth of stock you have, hereafter you are going to manufacture and sell being the unregistered person status. If you are being unregistered person status, after this, you are not eligible for claiming the ITC. So you might have claimed the ITC for 10 lakhs, but actually you consumed only 7.5 lakhs, right? So only for 7.5 lakhs ITC is you are eligible, and whatever the stocks you have, stock being, probably you may purchase a wood, that wood remains as it is, or you converted the wood into furniture which is in semi-processed form. 50% semi-finished form will be comprising the wood, and table is also there, manufactured and not sold. It also has the raw material. So you have to find out what is the raw material stock you have, raw material component in the work in progress stock, raw material component in the finished goods stock. The moment when you are going to apply for the cancellation, thereafter, whatever the stock you purchased, you are not eligible for claiming the ITC. Because of that reason, you have to state all this detail, and based on that, for the 2.5 lakhs, 45,000 rupees ITC is not eligible. So you have to refund this. Hope you will be now able to understand why do you want to mention all these things. Furnish the details of inputs held in stock and contained in semi-finished and finished goods and capital goods. But in case of capital goods, the calculation is pretty different. We'll see that later on. Clear? So these are the three steps you have to understand. Number one being genuine cancellation. Number two being cancellation because of the violation. Number three being the procedure for cancellation. So in the procedure for cancellation, 30 days and 30 days and show cause notice will be given for 7 days, right? And so what happens? You have to intimate raw material stock, raw material in work in progress stock, and raw material in finished goods stock, and capital goods, So as on the date of cancellation, apply for cancellation. So for what purpose? You have to refund. So ITC of stock of input contained in work in progress, finished goods and capital goods or plant and machinery should be refundable. This will be refundable as amount, not stating this being the stock. This 45,000 you have to refund, While refunding, you should not name this being tax. Whenever you name any payment to the government as tax, there is a chance of claiming it back as ITC. When you say it is only penalty like, so it is not tax, it is amount. It will be named as amount. Hope you will be now able to understand. So you have to pay this amount. Now, in case of capital goods, these things okay, sir. But in case of capital goods, I purchased an asset for rupees 10 lakhs, 1.8 lakhs is the GST paid. I claimed the ITC on this 1.8 lakhs. Now what happens here? Sir, this plant and machinery has around 10 years life, sir. But I am not sure. Currently I have used to 3 quarters, sir. 3 quarters. 9 months used. Then how can we consider, sir, in this case, in case of capital goods, the ITC availed being 1.8 lakhs. 1.8 lakhs minus Okay, minus 5% per quarter. Okay, you assume we have see here example, capital goods have been in use for 4 years, 6 months and 15 days. The useful remaining life being 5 months, ignoring part of the month. In this case, ITC attributable to the remaining life being whatever the ITC you claimed 1.8 lakhs into 5 by 60. What about that 60? Usually the effective life may be taken as 5 years. Find out the 5 years, 5 months value. 5 by 60. 15,000 is refundable. Similarly, here if you use 3 quarter, 1.8 lakhs into 3 quarters means 9 months you used completely out of 60. What is the remaining life? Sorry, 51 being the remaining. Okay, 9. Okay. This will be ineligible, balance is eligible. 9 by 60? 27,000. Balance 1.53 lakhs. It should be refundable. For the remaining life extent of the capital good, ITC and the capital goods is refundable. Clear? In case of inputs in work in progress and finished goods stock, no problem, you can calculate. In case of capital goods, you have to pay the output tax. In case of capital goods or plant and machinery, amount payable is whichever is higher of these two, whichever is higher of. One is this one number, second one being output tax. Okay, between these two, whichever is higher. What is this? So refundable amount as per this calculation being 1.53 lakhs. Am I right? Number one. What about the second calculation? If you want to sell this as a second hand goods, how much you will recover? Sir, 10 lakhs I purchase, sir. If I sell, I may get around 6 lakhs, sir. I will get 6 lakhs. What is the GST payable on this? Sir, GST payable on this being 5%. Probably 10%. So 10% on this being 60,000. Between these two, whichever is higher is refundable. You understand? So in case of capital goods, GST applicable for the remaining life compared with the output tax payable if it is going to be sold as a second hand goods. Okay. Tax on transaction value of capital goods. Transaction value being the second hand goods value, 6 lakhs. What about the tax applicable on that? So you have to calculate both between these two, whichever is higher will be refundable. Some other points. UIN cannot be applied for cancellation. United Nations applications cannot be cancellation. And cancellation will not reduce the tax due. So you cannot escape by cancelling yourself. Whatever the due you supposed to pay as on the date of cancellation, you have to pay it. You have to pay. Clear? So these are the 4 points you have to remember. Section 30 is all about revocation of cancellation. Any registered person whose registration is cancelled by the proper officer on his own motion, so he himself cancelled, then we can apply for revocation of cancellation within the 30 days period from the date of cancellation order. So you can apply. The proper officer either revoke within 90 days, may be extended to 180 days or reject. It's his own choice. Provided that the application for revocation cancellation for registration shall not be rejected unless the applicant has been given opportunity to be heard. Always, proper officer cannot cancel as he wishes. He has to give the chance to hear the applicant side also. Hear from the applicant side. That's called show cause notice. Clear? Now, the revocation of cancellation of registration. So what happens? The fourth one. If the revocation of cancellation is done for GST, automatically it is accepted to be revoked in CGST also. On revocation, file the return during the period of cancellation within 30 days. During the cancellation period, you have to file the return. So you got cancelled on 1st January 2026. but you got revoked on 1/2/2026, and during this period, whatever the transaction you have done, no, you have to file the return for this period within 30 days from the date of revocation. So with that, we have completed all the concepts related to the registrations. Before we complete this chapter fully, we'll see some theoretical questions also from this chapter. Okay. So who has to register will come under these three sections. Procedure for registration comes under these three, and one section is for the amendment, last two sections for the cancellation and revocation of cancellation. Is that okay? And especially in cancellation, this topic is very, very important. This content is very, very important. Okay, which one? The ITC calculation. Okay, this third one you have to notify and pay an amount. Fourth one is very important. We'll study the same along with the ITC chapter also. Okay, it's interlinked with those two chapters. Now, can a person without GST registration collect GST and claim ITC? No. If a person is operating in different states with the same PAN number, can he operate with a single registration? No. So, for every state, he has to need to have one first registration. Can a person having multiple businesses verticals in state obtain separate registration for each business vertical? Of course, yes. So, if you have two different business vertical, coaching as well as book sales, two business vertical, I can have two registration number. Is there a provision for a person to get himself voluntarily registered through, though he may not be liable to pay the GST? Yes, voluntary registration is possible, and the registration process is similar to the regular one. Can the department through the proper officer suo motu proceed the register of person? Yes, suo motu registration also possible if he has any doubt. And whether the registration granted any person is permanent, usually permanent unless he applied for cancellation. Okay. Is it necessary for the UN bodies to get the registration under GST? Yes, they will get UN number for what? They will get the ITC refund. Okay. What is the responsibility of taxable persons making supplies to UN bodies? They have to code the UN number. Okay. Usually GST number you will code being the recipient. Here you have to code the UN number for the recipient. Okay. What is the validity period of the registration certificate issued as a casual taxable person and NRTP? 90 days or extended to another 90 days or days asked for. Between these two, whichever is lower. Is that okay? And what happens when registration is obtained by means of willful misstatement, fraud, suppression? So this will be cancelled under section 29 by the proper officer. Is that okay? And even cancellation is possible retrospectively in this case fully. Okay. And is there an option to take centralized registration for services under GST law? Centralized registration is not possible. Centralized means one registration for the entire India. Okay. For whole of India, we cannot get single registration. What could be the liabilities insofar the registration is concerned on transfer of business? While transferring, the new transferee should register himself, apply for registration. Then old transferor should cancel it. Suo motu or means himself or through his authorized representative. At the time of registration, will the assessee have to declare all his places of business? Yes. Principal and additional place of business he has to disclose. What will be the time limit for the decisions on the online registration application? Time limit. Okay. So 3 days for asking for his clarification, 21 days in case of Aadhaar clarification, and for the response 7 days will be given. Within 7 days they have to confirm or reject. So 377. 377. This is clarification from the applicant. This is the either application acceptance or rejection will be done within 7 days. If it is not so, it will be considered as deemed to be registered. But the 21 days is for Aadhaar authentication. Okay. Now, does cancellation of registration impose any tax obligations on the person whose registration is so cancelled? Yes. Until the date of cancellation, any tax liability is supposed to be payable. He is liable to pay only. There is no chance to escape. So with that, registration chapter is completely over. Clear? So the main focus is that you have to study section 22 in detail, and you have to study especially in cancellation related to the refund of ITC for the raw material and capital goods. Is that okay? And small logic of So we'll now discuss payment of tax. So three sections are going to be referred for the payment of tax. And understand, if the payment tax is delayed, then what rate of interest is liable. These four sections are going to be covered here. 51, 52 or other topics will deal along with the TDS and TCS. Now, see, when you want to pay the tax and all, no, you need to have three accounts with the income tax department, GST department. Okay, three accounts. Clear? One, account number 1. Okay, account number 2. Account number 3. Three accounts are going to be maintained. Okay. See, this one will be named as electronic cash ledger. This is called as electronic credit ledger. This is called as electronic liability register. Okay. When A or supplier does supply to recipient, okay, 1000, GST payable on this being 180. Supplier received it from his supplier, okay, Mr. A. 500, GST on this being 90. Clear? Now, supplier has to pay 180 and get this GST or ITC, and balance amount payable being 90. Balance amount payable being 90. Is that clear? This is the order. The amount supposed to be payable, okay, will be the revenue to the government, right? So for that, this S being the debtor, post that value here. GST payable. GST payable. Okay, 180. When he purchases by paying the GST, this 90 he can get refunded. Automatically it gets credited to his own electronic credit ledger here. GST ITC 90 rupees. Is that okay? Now, what is the journal entry for the this one? Electronic liability registered to GST. Okay, for this party has to pay amount. S account debit to GST receivable. That's how the government says. And this one is GST account to S account. So GST is payable to the supplier. Okay, that's how the thing is there. Now, while making the payment of this one, he can use the electronic credit ledger. He simply posts that value here. Electronic liability register 90. Electronic credit ledger 90. That's how the payment is now confirmed. Clear? Now what about the another 90, sir? Another 90, no other way, he has to deposit from the electronic cash ledger. electronic cash ledger 90. First priority goes from this account, second priority goes here. How the money comes here? From S bank account, he can transfer the amount to electronic cash ledger. That will come here. That will come here in the bank account credit side. Credit side. It's a receipt, no. But it's going to be in the GST, means GST's number, government's angle. So here bank account. How much? 90. Now he has to pay this amount, electronic liability register, 90. This will be the second. This is the second priority. Clear? Second priority. Now, what happens if the payment is delayed? Payment is delayed. Then interest will also be recoverable. Interest, penalty, amount. When the amount is payable? In case of refund of the ITC. Okay, whatever it may be, in case of cancellation, you have to refund. And fine, penalty, whatever it may be. If all these things comes around rupees 20, how can I make this payment? This payment can be done only routed through electronic cash ledger. So electronic liability registered. So 20 rupees. And for this payment, can we use the electronic credit ledger? No, we cannot use it. So electronic credit ledger can be used only for the payment of output tax. Electronic cash ledger can be used for payment of output tax as well as any other penalty, interest, amount refundable for whatever it may be. It can be used. So the amount is not sufficient. You can again transfer another 20 rupees also from your bank. This is the process. This is the main process. Clear? Let's see. Section 49, payment of tax, interest, penalty and other amounts. Tax is separate, interest, penalty and other amounts separate. Every deposit by a person by internet banking, credit card, NEFT, RTGS, UPI, IMPS, in all this mode, okay, even over the counter also by cash. But in case of over the counter, only 10,000 per challan per tax period is applicable. Okay, per challan. So the amount deposited in electronic cash ledger is routed through IMPS, UPI, whatever it may be. Can it be cash? Of course, restricted to only 10,000. Restricted to only 10,000. So whatever the amount you're supposed to pay from the electronic liability register, so you have to transfer from electronic cash ledger. For the electronic cash ledger, you need to have the fund. No, the fund is transferred from your bank account, IMPS, NEFT, RTGS, whatever it may be. Is it possible to pay in the form of cash? Of course possible, but maximum 10,000 only permitted. But this will not be applicable for the government departments or notified persons, or if the proper officer authorizes so, then he can deposit. Proper officer authorizes only when there is outstanding dues and asking him to deposit and he gives the permission. During investigation, enforcement activity or any ad hoc deposits. In this case, proper officer may authorize. In this case only you can pay the amount in cash. This amount will be credited in which account? Electronic cash ledger. So any amount in electronic cash ledger can be used for what? Tax, interest, penalty, fee or any other amount. For whatever it may be, you can use it. If there is any balance, what you can do? You can refund also, get it refund also. Okay, you are eligible for refund also. But in this case, refund is prohibited. Refund is prohibited. You can claim the cash only in case of UIN holder. UIN holder. Others you cannot claim this. Is that clear? Electronic cash ledger, the amount is deposited from the bank account. Of course, cash also possible. Number one, electronic cash ledger. This electronic cash ledger can be used for what? Tax payment as well as other dues also. Both the purpose it can be used. Clear? Now, what about the ITC? Based on self-assessed return, you self-file and you say that this is the GST I paid while purchasing, you can claim the ITC. The ITC shall be credited where? Electronic credit ledger. It will be credited to electronic credit ledger. This will be used for payment of output tax only. Output tax only. You cannot use it for tax, interest, penalty or any other amount. For this purpose, this cannot be used. Okay. For other purpose cannot be used. Clear? But you have CGST, SGST, UTGST and all. No. Can we interchange and use it? Then there is a procedure. So if you have credit in IGST, CGST or SGST or UTGST, okay, if you have operations in 4 states, you need to have 4 accounts. Okay, so if you have operations in 4 or 5 different states, you need to have 4 or 5 different SGST, CGST, IGST. Is that clear? Now, IGST can be used for IGST purpose. Okay. CGST can be used for CGST purpose. SGST, UTGST can be used for the respective state only. Respective state only. Now, what happens in case of CGST, sir? This is output GST. This is input GST. If you have electronic credit ledger, the amount in electronic credit ledger being 1000, this is the amount available in electronic liability registered to pay. The amount payable for IGST being only 500. You have 1000 rupees in electronic credit ledger, but you have to pay only 500 rupees for the IGST. Still you have 500 rupees excess. What you can do? You can use it for what? CGST or SGST as per your choice. But in case of CGST, after the CGST, if you still have excess, you can use it for IGST, not for SGST. In case of SGST, you can use it for SGST first, else you can go for IGST second, not for SGST. From this, it is very clear. CGST to SGST is prohibited and vice versa is prohibited. So from this it is very clear, IGST being universal donor and acceptor. In blood you might have seen, right? Universal donor and acceptor. Okay. So ITC cannot be used for paying RCM basis. Okay, ITC cannot be used. In case tax payable under RCM, you have to pay using the electronic cash ledger only. Thereafter, you get it credited and that credit can be used for any tax payment. So, whenever it is being the RCM means ITC, you have to use the EC, electronic cash ledger only for RCM basis payment. Order of discharge of tax and other dues. How can you pay this, sir? You have to pay tax and other dues of the previous period first, current period second, that too after payment any other dues including demand under section 73, 74 exist, you can pay. That's the order. So previous year tax period, if there is any pending, unless you pay it, you cannot pay for the current year. After paying the current year, you can go for the demand raised. If there is any violation and all, no, section 30, 73 and 74 will raise a demand to pay. You have to pay that time. This will be the last priority. Right. Now, section 80, rule 86A, it's not section, it's a rule 86A. Now, this rule number 86A says, electronic credit ledger, the amount in electronic credit ledger cannot be used. Sometimes there is a restrictions. The assistant commissioner and above category commissioner or not below the rank of assistant commissioner may restrict use. When? Okay. When he has a reasons to believe ITC available in electronic credit ledger has been fraudulently availed. Okay, if he thinks that amount is received by you fraudulently, then automatically assistant commissioner or commissioner, okay, may block or restrict to use this ITC for any payment of liability or claim the refund of unutilized ITC, that too in writing. 86A. Now, when the restriction is raised, ITC availed on the basis of tax invoice, debit notes. Okay, tax invoice and debit notes. Based on that only, you have to claim the ITC. But if these tax invoice and debit notes issued by a non-existent registered person, a bogus person, you might have seen the news, no? Okay, lots of bogus tax invoice. Based on this, some assessee claimed the ITC. So, bogus tax invoice. Okay, so if you claim, then automatically the ITC claimed, is restricted, blocked, not to use it for some other purpose until the investigation is over. Okay, conducting no business from place declared in registration without actual receipt of goods or services or both. So, you purchased, you paid and you got the tax invoice, but you have not get the goods delivered, then you are not eligible for claiming. You have to claim only once the goods is delivered to your place, and else you are not able to claim this now. And in respect of any surplus, the tax in respect of which has not been paid. Okay, supplier recipient. Okay. So, 1000 rupees is the value and GST on this being 180. This 180 should be payable by supplier to the government of India. Okay. If he has not paid, you are not eligible for claiming the ITC. So, responsibility is in the hands of supplier. He has to deposit, only the recipient can claim. Otherwise, recipient will question him, why don't you deposit it further immediately. That's how he can raise the query later on. So, recipient can claim only if the supplier deposits this. Okay, these are the first point. Second point being, the registered person availing ITC has been found non-existent. This fellow is a forgery. Earlier, supplier is a forgery, now recipient is forgery. Third being, registered person availing ITC is not a possession of tax invoice. He needs to have the debit note or credit tax invoice. If I want to claim the ITC, then I need to have the tax invoice. If I don't have the ITC, means tax invoice, I lost the tax invoice, I am not eligible for claiming the ITC. Any other prescribed document. And this restriction is imposed for 1 year, but can withdraw such restriction if he is satisfied. Okay. 3 conditions. One is supplier is being bogus, another one is recipient being the bogus, another one is the goods not received or the supplier has not paid the tax. Right. The last one being, you need to have the valid document, tax invoice and debit note, else you are not eligible for claiming the ITC. Okay. Section 86A restriction. I recap this along with ITC also. So, we have to understand the tax payment and ITC parallelly, because in ITC, how do I claim, how do I enjoy? How do I enjoy means use it for payment. So, unless you know the payment, there will be trouble. So, you have to link these two chapters, ITC as well as payment of tax, both parallelly. Clear? That's why I complete this here. Now, rule number 86B, this is the another restrictions. Now, whenever you get the amount in electronic credit ledger, okay, the amount of electronic credit ledger can be used to discharge only 99% of the output tax liability. So, in your electronic credit ledger, you have 100 lakhs in your credit. In electronic liability register, you have to pay probably 50 lakhs only, 50 lakhs. Okay, this is the output tax, this is the input tax. Surprisingly, your input tax is higher than the output tax. In this case, only 99%. How much is that? 99. 49.5 lakhs can be payable from electronic credit ledger. Balance 1%, no other way, you have to pay using your electronic cash ledger. So, electronic cash ledger. The amount of electronic credit ledger can be used to discharge 99% of the output tax liability. In case where the value of the taxable supply other than exempt supply or zero rated supply in a month exceeds 50 lakhs. Provided in a month their exempted supply and zero rated supply exceeds 50 lakhs. Okay. So there may be scenario where the input tax is higher and output tax may be lower, because a portion being the exempted and zero rated. Because of that reason, there will be inverse tax also. Means input tax is higher and output tax is lower. In that case also, maximum 99% only you can pay out of electronic credit ledger. Balance you have to pay from your electronic cash ledger, from your pocket. Exceptions. Payment of income tax more than 1 lakh for each of the 2 financial years, then he is eligible for pay completely, no problem. You understand? And receipt of refund of ITC of more than 1 lakh in preceding financial year under zero rated supply without payment of tax and inverted duty structure. So he is also eligible. Okay, inverted duty structure means input tax value is higher than the output tax. So the tax he has to pay for the output being 100, the tax he claimed as input being 200 rupees. Also possible. There may be chances because government may notify the finished goods may be cheaper for the persons using it. Okay, sometimes the government may give the notification. Because of this notification, this inverted duty structure may also be possible. In that case, he can pay. And payment of output tax liability through electronic cash ledger in excess of 1% of the total output liability cumulatively in current financial year. Okay, cumulatively it's more than 1% in electronic cash ledger, but this month you are paying 100% in cash, electronic credit ledger. This month. So it means previous year 100 lakhs, you know, in this 100 lakhs you paid 100 lakhs, 80 lakhs from electronic credit ledger, another 20 lakhs from electronic cash ledger. Okay, electronic credit ledger. In this year for 100 lakhs, entire 100 lakhs I can pay electronic credit ledger because total value being 200 lakhs. Total value being 200 lakhs. On that 1% should be in the form of cash. No, 1% means 2 lakhs. But he already paid to 20 lakhs in electronic cash ledger in the previous month. Cumulatively for the previous year, 1% should be at least in electronic cash ledger. And in case if he is being the specified registered person like government department, public sector undertaking, local authority and statutory body, of course they are eligible for paying cash only. In this case only, you cannot pay the entire output liability in the form of electronic credit ledger. You have to pay at least 1% from electronic cash ledger. Is that clear? Restriction 6986B. Now, output tax should not include GST paid under RCM. So, GST paid under RCM is not going to be includable. This output tax will not include. This is input tax. Input tax. That input tax will be payable only electronic cash ledger only. Already we have seen. Right. Total value of interstate supply of raw and cents for the month of February is 100 lakhs. Said supply is taxable at the rate of 18% IGST. How much output tax payable using ITC? So 100 and in that 18% being 18 lakhs. How much can be using electronic credit ledger? Electronic credit ledger can be used for 99% payment. Balance 1% should be only in the form of electronic cash ledger. Okay, come on, tell me 99% of 18 lakhs. 17.82 lakhs can be in the form of electronic credit ledger. Balance will be electronic cash ledger. Financial year up to August, the total output tax liability of a registered person is 30 lakhs. And such registered person has deposited 1 lakh through electronic cash ledger. Okay, how much must the output be taxable using electronic cash ledger if output liability in the month of September is 50 lakhs and B being 100 lakhs? So, in the previous month, he has paid 1 lakh using electronic cash ledger. In this month, he is paying 50 lakhs. 30 plus 50, 80 lakhs. You know, 80 lakhs. How much can be in the form of electronic credit ledger? 90%. 90% being 99%. Otherwise, how much should be from electronic cash ledger? 1%. This will be 70? 99%. 79.2% lakhs. Electronic cash ledger being 0.8 lakhs only. But last year we paid how much? 1 lakh. Cumulatively they will be eligible. So no problem. Okay. What about the payment required through electronic cash ledger? Nil. No need to do any payment through electronic cash ledger in this one. Suppose in case this year it is 100 means last month 30, this month 100 means 130 lakhs. How much should be electronic credit ledger form or how much should be in electronic cash ledger form? 1%. 1% means 1.3 lakhs. But in the previous month, he has paid using electronic cash ledger to the extent of 1 lakh. So balance 0.3 lakhs is shortage will be payable in the form of electronic from the electronic cash ledger for cumulative valuation model. For cumulative valuation model. Is that clear? Now we'll move on to the next one. Third point. All liabilities of a taxable person shall be recorded in electronic liability register, already explained. Discharge of the amount payable for electronic liability register being self-assessed tax related to the previous tax period and current tax period, and any other amount like tax short paid or not paid will be payable. Is that okay? Understand that any tax paid deemed to have passed on to the recipient of supply. Means whatever the tax, output tax you are paying, assume that you have collected from the recipient. So recipient only be the bearer of this. Whatever the tax you pay is assumed to be collected from the recipient, passed on to the recipient. This is what about the basic understanding. And some further explanation. Date of credit to the account of government in the authorized bank shall be deemed, not date of deposits. Okay. So in case of electronic cash ledger, it should be credited in the electronic cash ledger with the government of India. Earlier, before this act, GST, old act, if I issue the check on this date, it takes at least 2 or 3 days later for collecting, still the issue date is considered as a deposit date. But now, no, you can issue at any time earlier also, no problem. The amount is credited in the book will be finite. Okay, in the electronic cash ledger. Tax and other dues already explained. What is called tax and what is called other dues. Okay. So I explained all these things already. Electronic credit ledger can be used for ITC. Electronic cash ledger deposited through this can be used for tax payment. This can be used only for okay. This is the total amount you have in electronic liability register. This can be used for tax. This can be used for both. Is that okay? Now you have to understand the major head and minor head. Major head being, so if you are operating in 2 different states, you need to have IGST, CGST, SGST for state 1, SGST for state 2, and cess. These are the major heads. These are the major heads you have. In that IGST, within that you have tax, interest, penalty, fee and others. For what you are paying this money? You are paying to the central government, IGST. Okay. For what? Tax, interest and penalty. Okay. Because I paid amount for the amount payable for tax being 100, but I paid 200 rupees. Thereafter I came to know, sir, 100 rupees only required to pay, but I paid 200 rupees. Can I transfer that to interest payment purpose? That is called cross utilization. So under IGST, you deposited 200 rupees for the tax payment, but actual tax payment is only 100. Later you intimated that, sir, adjust that 100 only there, remaining 100 you can transfer for the interest payment and other things. That is called inter-head adjustment. If there is no unpaid liability in electronic liability register, cross utilization of funds across major or minor heads allowed. So under IGST, you deposited for this and can be used here or you can retransfer here. Similarly, in UTGST also you need to pay the tax. Can I change from here to here? Of course, that is also possible. Within the same major head, you can change or transfer to any minor head or one minor head to the another minor head under different total major head. Is that clear? How do I transfer? electronic cash ledger of CGST to electronic cash ledger of SGST and UTGST you can transfer. There's a prescribed manner. Okay. Now let's see. While making the payment, you'll get the challan, right? So the payment by challan. While making the payment, you get these are the challans, CPIN and SIN. We don't get the physical challan hereafter. We don't get any physical challan. You will get the challan in e-form only. CPIN is nothing but common portal identification number. It is a 14-digit number to identify the challan granted by the taxpayer. CPIN remains valid for 15 days. So once you deposit, the moment you deposit, you will get 14-digit unique number representing CPIN. Okay, see, if you are transferring the fund, you get two messages, amount debited from your account. Second one is, the moment it is credited in the recipient account, you get one more message as amount credited in the recipient's account. Two messages you will get. The moment you deposit, you will get the CPIN. But CPIN is the evidence that you have deposited. And it's not confirmed that it is received by the recipient. And you have to wait for 14 days, 15 days. Challan identification number is generated by the banks once the payment delay of generated challan is successful. Once it is received by the government of India, then you will get the SIN number. So the SIN number is nothing but from the CPIN you get 3 more digits added for the bank code for the reference. So first once you deposit you get the CPIN. Once it is credited in the respective account you will get SIN. SIN will have 17 digits and CPIN will have 14 digits. And we have the BRN, bank reference number. Okay, is the transaction number given by the bank for payment against a challan. Payment against it. So this is all bank reference number. And EFBP, okay, this is called electronic focal point branch. Every bank should have at least one branch exclusively for this GST transaction, that is called EFPB. There are branches, these are the branches authorized to bank which are authorized to collect payment of GST. That's a duty. One branch for a bank for Pan India, you need to have EFPB. Open account for all major heads for all the government. So you have to open what CGST for the central government and for all the state government. So you have to open Tamil Nadu state GST and Andhra Pradesh state GST. Like all the states and union territory, you need to have the account. So if you are being the SBI bank, you need to have how many accounts? For all the states and a union territory, you will have all the accounts in CGST also. Clear? Then they are responsible for collect and deposit the amount there in that respective account. Now, form PMT. PMT is for payment. Okay. This payment is transfer of erroneous deposit under minor head of a major head to another minor head, same or other major head. So it's for transfer. I deposited for the tax, but I want to deposit for interest. Can I transfer? Yes, of course you can transfer. For that, there is a form GST PMT1, PMT9. Okay. Okay. Then rest will be the same. Now, Mrs. Daksha Enterprises has made a cash deposit 10,000 under the minor head tax of major head. Major head being GST. Another major head, they have the tax and interest penalty and all, but they have deposited 10,000 rupees for this. It has a liability of rupees 2,000 for minor head interest. So this is the amount deposited, but actually liability being nil for tax, but 2,000 interest is payable. Wrongly I deposited into the minor head tax. Can I change this from here to here, sir? Yes. What form you can use? GST PMT 9 form can be used. Is that clear? You no need to further deposit, sir. That amount is different, sir. This amount you have to separately pay. No, you no need to do that. You can ask them to transfer the tax amount for the interest payment using the GST PMT 9. So with that, all the concepts of payment of tax is over. Now, interest payment. Okay, interest payment. Now, see, in case of interest payment, Maximum interest rate being 18% is leviable for delayed payment of tax. So, electronic liability register, electronic cash ledger, electronic credit ledger. The amount payable for tax being 100, you have 50 rupees in your credit, 60 rupees in your credit, electronic credit ledger. You have 60 rupees in electronic cash ledger. Electronic cash ledger. Is that okay? Now you delayed to pay this amount. You delayed by a month. So thereafter you paid. While paying, you use this 60 rupees for this. Balance for shortage you pay from electronic cash ledger. Now you have to pay 18% interest on what? 18 rupees interest will be payable only on this 40 for 1 month. Is that okay? So, delayed payment of tax, interest is calculated only on the net tax paid, means using electronic cash ledger from the output tax minus electronic credit ledger. Output tax 100, electronic credit ledger we have 60 rupees balance, only 40 rupees you are transferring from your electronic cash ledger, only for that interest is liable. If return is filed after the due date as per section 39 but before any proceeding under section 73, 9 and 74. 73 and 74 is notice based payment, okay. 18% will be applicable. How do I calculate the interest for the period, sir? From the day of succeeding the day on which tax was due to be paid on the date of payment. For example, you have to pay on 20th March 2026 but you paid on 25th March 2026. Leave the date, start with 21, 22, 23, 24, 25 including the date of payment. So 5 days interest will be payable. Is that clear? Now, next one. In case you claimed ITC excess than what you are supposed to claim, or the tax payment being 100 rupees but you paid only 60 rupees wrongly, this is called underpayment. You have two scenarios. First one is you have not filed the return at all and filed and paid at late. 18% will be payable on net tax paid. But here you paid but wrongly paid lesser amount and you claim ITC more than what you are supposed to claim. In this case, gross liability will be taken. Gross liability means how much? 100 rupees. For the 100 rupees, 24% will be tax rate applicable. Interest rate is applicable. Currently only 18%. May go up to 24 also as government notifies later on. Currently it is not notified. So 25, currently it is 18%. 24, currently it is notified 18 only. You have to understand the two difference. If you file late and pay late, only 18% on the net liability. If you claim more ITC or you pay lesser tax, wrongly did. Okay, it's a reversal. While reversal, gross value paid by either electronic cash ledger or credit ledger doesn't matter. For full value you have to pay at the rate of 18%. With that, section 50, interest and delayed payment is also over. Let's see here. Mr. Alok, a registered supplier of your taxable goods, filed a GST at 3B for the month of January on 15th April 2020. The prescribed due date to file the said GST 3B was 20th February 2020. So it delayed. February we have how many days? 29 days, leap year. Okay, leaving 20, 21 to 29, 9 days and payment is made on 15th April means another 15. So 24 days will be there. Oh, okay. February, March also we have 31 days, April 15. So then overall 55 days. If it is not being the leap year, then it will be 8 days, so 54 days. 54 days. If it is not being the leap year. And the amount of net GST payable in cash, electronic cash ledger supplies made by him for the said month worked out rupees 36,500. Briefly explain the related provisions to compute the amount of interest payable. How much you have to pay? 36,500 into 18% into 54 days divided by 365. If it is being the leap year, 55 divided by 366 can be taken. Clear? 366 will be taken. This is a delayed filing. In case of delayed filing, only the payment using the net cash ledger. Okay, net tax liability is supposed to be taken for the interest calculation. Now we'll go for the next one. Mrs. ABC Limited have filed GST at 3B for the month of July 20 within the due date prescribed under section 39, 28, 2020. They have done clearly. Post filing the return, the registered person have noticed during September 2020 that the tax dues for the month July 2020 have been short paid by 40. Short paid. Mrs. ABC Limited paid the above shortfall 40,000 through GST at 3B of September 20, filed 2010-2020, payment through cash ledger being 30 and credit ledger being 10. Electronic cash ledger being 30, electronic credit ledger being 10. Now this is called net tax liability, but it is being the short paid. You have to take the 40,000 rupees for the interest calculation. The rate of interest being 24, but currently it is only 18%. Okay. Examine the interest payable. 28, actual payment being 2010. In August, we have 11 days, September 30 days, October 20 days. What is the total number of days? 61 days. So you have to calculate interest for 61 days. 1203. Clear? What would be your answer if GST at 3B for the month July 2020 has been filed belatedly? He filed late. Then in case if the payment is due to late filing, only the net tax liability will be considered for interest calculation. 30. This one. Into 18%. Into 61 by 365. I think 902. So notes, ignore the effect of leap year and all. That's why I removed the leap year here. Clear? So features of GST payment process, just have a small background. Everything is electronically generated challan you have. Everything is perfectly maintained. Benefits of tax payment system theory. Okay, practice question. First question, you can remove it. What is called, let me explain, are principles of unjust enrichment applicable for payment made under GST? Usually yes. Now, A, B, A sale value being 100, GST collected 18, 118. So A has to deposit 18 rupees with Government of India. Am I right? And later A came to know the applicable tax rate for this is not 8, it's only 5 rupees. Now the question is, will he be able to claim remaining value refunded? Can he claim or not? Now the question is, who has paid that 18 rupees? Is it A or B? A paid but collected from that. Burden is transferred to B's head? No. If you are claiming the refund, then the department will inquire, is it really reaching the person who is really bear the burden? No sir, then it is not going to be payable. Means unjustifiable manner, you are enriching your worth. You are enriching. That is called unjust enrichment. Unjustifiable manner. Others' money you claim refund, how will it be possible? Let the B will come and claim. Right. Mr. A has deposited a sum of 30,000 under the minor head interest. column for the major head IGST. In IGST, there will be tax column and interest column, any other amount column, but he has deposited 30,000 here. At the time of filing GST at 3B for a particular tax period, he noticed that there is no sufficient amount under the minor head tax towards payment of 30,000 rupees. Then, when approached with the jurisdiction tax officer, Mr. A was guided to deposit the tax amount under proper head of the account and claim the refund. So, what the head told, you can claim the refund and asking him to deposit. Is it so? No, not required. You can simply ask him to transfer from here to here by submitting the GST PMT 9 form. Now, Mrs. ABC and Co. have defaulted filing the return under section 39, that is GST at 3B for the month of March 20 within the specified due date. Reason for such delay is attributable to delay in closure of books for March 20, which have been finalized during May 2020. GST Common Portal prompted for payment of late fees payable under section 47, a sum of rupees 2,000 under CGST. Accountant Messrs. ABC Company sought your confirmation for payment of such late fee through the balance available in electronic credit ledger. So, will it be possible to pay using the electronic credit ledger? No, so you can use only electronic cash ledger. Now, so this is theory, you can read it yourself, related to the tax payment and challan generation. And the last one being Sahasri is a registered software consultant. On account of her ill health, she could not provide any services during the month of October. However, she had to incur all the expenses relating to her office. She paid 75,000 towards vendors, various vendors. So she paid. She has not done any sales, but she has incurred the expenses. The total input tax involved on the goods and services procured by her being 13,500. So ITC being 13,500 available in electronic credit ledger. Out of the total bills paid by her, one bill 15,000 relate to the security services available for security of her office. Okay, this is credited in electronic credit ledger. Now electronic liability registered. What about the output tax? 0, because she has not done any output services. But anyhow, one bill 15,000 relates to security services availed for security for her office. Tax on which is payable under RCM basis, input tax involved in such bill being 2,700. This 2,700 will also comes under electronic credit ledger, but this value will be payable only using electronic cash ledger. So whatever the RCM basis tax you pay, first to pay using electronic cash ledger. After that, showing the same bill, you can claim it back. That will come to the electronic credit ledger. Pay using electronic cash ledger and get it credited in electronic credit ledger. Is that okay? Very, very important. Sahasri is of the opinion that the month of October, no GST is payable from electronic cash ledger as she has sufficient balance of ITC for payment of GST and reversal. So the GST payable for RCM basis 2,700. She has already sufficient ITC balance. So she thinks that not required to pay. No. The RCM basis payment will always be made through electronic cash ledger only, though she has sufficient ITC balance. Clear? So with that, payment of tax chapter is completely over.